All right, everything looking good. We should be alive. It's like we're coming through. All right, let's go ahead and get it started. It is Wednesday, 8 p.m. Eastern Standard Time. Welcome back to the channel, Crypto Trend Trader, with our midweek market update on 6/29/2022. Remember, none of this is financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. So I made some adjustments to my streaming software. I think the mic was, well, I noticed the mic was coming through fairly quiet. So maybe a little more intense than usual. But this should be more along like standard with what you would get from other channels or previously. If it's picking up too much random noise or is not, I can adjust it. But I think this is probably where we want to be. I just noticed the last couple of streams were coming through like real quiet when I went to listen back. So just let me know if somebody it's coming through loud and clear, and we will go ahead and get this stream started as always. Soto says, man, Photoshop skills, poor Kathy. Yeah, I know, man. Jerome's taking it out on her for sure. You know, it was really a tough decision, though. Was it going to be Michael Saylor or Kathy Wood? That Jerome, well, cleaned up, if you know what I'm saying. But the truth is, he's in the middle of cleaning them up right now. Matter of fact, he's taking out the trash as we speak. So maybe we'll see one in the future with Michael the Failure. So let's take a look at what's going on in these markets. Obviously, a lot of craziness going on here, as once again we hear everybody screaming for the bottom is in on equity markets, the bottom is in on crypto, etc. And I believe it was, I can't remember, what was it, the last stream we did, we were talking about the 4-hour starting to show signs of bearishness, as it appeared that it was going to cross back bearish, the 821, and likely lead to further downside. And then obviously when we look at the daily, we got rejected off the 8, and we are now revisiting the lows. We just closed once again are at, or I mean basically right at the lowest close we've had so far on Bitcoin. So at this point in time, we basically have a daily support, and if we break down from that horizontal support, there's no reason we don't go much lower. Now if we look at the futures chart, it looks slightly different than the spot chart, because we did have that flush out or that cascading stop loss waterfall over the weekend. But I think it's very likely that they were headed back down to those levels. But we can talk a little bit more about that in our technical analysis. We have a couple of requests as well for this week, and then there's a couple things that I specifically want to talk about. Obviously, we'll get into energy and everything and what I suspect is going on there and what it looks like is happening there. We're going to talk a little bit about commodities. I haven't looked at the lumber chart with you guys for a while, but I think it's very important to take a look at that, as in many ways the lumber chart was sort of showing the inflation ahead of time, that commodity inflation that we were seeing, and now we're seeing it pull back. I want to look at wheat, and then obviously, like I said, energy. I mean, we've seen nat gas had a wicked pullback as well. So we're basically seeing much of what we've been discussing and predicting come to fruition. I want to discuss where I think it's going from here, what the last couple days like rallying and volatility is. But before we get started with anything, I just want to touch on or remind everybody the most important thing right now is we're literally about to have the end of our second quarter. We're about to have the first half of the year concluded. So there's some big things coming with this. We're going to get another CPI print. I believe it's tomorrow. So we'll see another CPI print tomorrow. That's going to be huge, because we know that the Fed has talked about inflation and how they don't want to look at, they basically want to look at CPI inflation to get an idea, but they're not necessarily considering what's a leading indicator, what's a lagging indicator, what's telling them what's going to happen. What they're looking for now, quote unquote, is actual hard data. So regardless of what we see, that we know they want to get sustained like multiple months of declining inflation. So I don't think anything's going to change. I think we should fully expect the next rate hike to be 75 basis points, possibly even 100. If the Fed sticks to what they did last time too, there's a possibility that they sort of leak it out or send out a bunch of talking heads ahead of time to just let the market know so they don't cause any shocks in the market. But the truth is, as we come towards the end of the second quarter, the first half, realistically, with the revisions we saw today on our GDP print, we know that first quarter we had a negative GDP print, and it was revised even more negative today. Not a ton, but even more negative. And we know that they came out and basically gave us the prediction for Q2 GDP, and it's been revised multiple times, and now it's revised to 0. So if they're not right by, if they're not overshooting to the downside by at least 0.01, we're going to end up with a negative GDP print. And regardless of what the GDP print is for the second quarter, we know that the first half is going to be negative because we know it's not going to be some big number. We know that for sure. So that being said, regardless of if we're in a technical recession, 2 quarters of declining GDP growth, we know for sure that the first half, is declining. So, average it out, 2 quarters, add them together, divide by 2, and it's a fucking recession, like it or not. So regardless of what we want to call it, in my opinion, it's only just begun. We still have not seen companies come out and start revising their, forecast for earnings going into the future. And we talked about this in depth previously on some streams. But, as long as we have a numerator and a denominator, if we're only adjusting one, it's just a matter of time before we adjust the second one. So fact of the matter is, we've had all these adjustments to price, and now everybody's saying things are fair valued. Well, surprise, until the earnings comes down as well, we don't know if these companies are fair valued. So once we get the earnings revisions, which everyone knows is coming, the market is just right now looking the other way. They're in denial. Oh no, things are fine. Everything's rosy. The whole world, including the markets, know for a fact that there's going to be negative revisions coming for earnings. So until that happens, we still don't know what fair value is. The numbers that we have right now, it's basically like saying, oh yeah, if you divide 10 by, 5, then, 2. So that's good. But right now we just have, realistically, we have 10 over X. So how can we solve for, the answer if we don't know what X is? So that's what's going on right now. We have, part of an equation, but we don't know, what the variable is. So if 5 is right and we have 10 by 5 and it's 2, then it's like, oh, okay, the markets are fair valued. So perfect. And that's what the market's doing right now. But if all of a sudden it's 10 divided by 1, well then, PE ratio is 10, not 5. So what, do we need to cut the price in half to make up for the decrease in valuation or earnings, I should say? We do. So the fact of the matter is, if you're really looking at what the market's doing right now, it's basically assuming that all these companies are telling the truth and that their earnings predictions are going to be correct, because statistically, they usually are. That being said, obviously this is not a statistical time. We're at probably one of the craziest times in existence, and anybody with, part of a brain, or even if you're, a hamster-sized brain, I would assume that you can look at what's going on and know for a fact that, the predicted earnings that we're going to get are not going to be met or beat at the statistical rate that they typically are. So that being said, the most important bullet points, for what's going on right now is we're literally days away from the month ending. We're days away from the quarter ending and days away from the half ending. So much of the volatility we've seen over the last couple weeks is people either front running in or out of positions to position for the next quarter or next half. And when I say people, I mean people that matter. So like, hedge funds, whales, market makers, etc. Retail we're just guppies that swim around when the whales and the sharks are feeding. Okay, that's what we are. So when I talk about people, I'm talking about, the big people, the ones that matter. So that being said, the most important things, the big bullet points, in my opinion, for right now are we're days away from, big important things happening. And the market has priced in all the news that it currently has, or all the data that it currently has. So as we start to get this new data flowing in, as far as inflation, as far as GDP, as far as, earnings predictions, or forecast, and then actual earnings start to come in as well, we're going to get a much clearer idea And then obviously with, the next meeting coming up and potential rate hike expecting 75 basis points, possibly 100, that's all data that's going to change the market. So right now, let's just assume the market is efficient 100% and everything's right. Well, very, very soon, we're going to get different data and it's going to change, assuming the market is efficient. Now, let's just assume the market is wrong and it was overly ambitious because it's been trained to be that way over the last, arguably 20 plus years, at least 14 years, maybe even if you want to really stretch it, last 100 years. But regardless, the market has been trained to essentially always be bullish and just look for that opportunity. So we can assume that the market is not efficient right now and that it's over ambitious about what's to come. So that being said, that means that we are very soon, in my opinion, going to have to price in bad news times 10, because there's a bunch of different bad newses that we're about to get. And then on top of that, the market has already priced in, an ambitious outcome. And in all reality, it's going to have to shift from ambitious to neutral to negative. So in my opinion, there's another big repricing coming very, very soon. So the last thing we want to do right now is rush in or out of positions anticipating the outcome, especially if you're anticipating a grass is green type outcome. Now, if you're anticipating like meteors falling from the sky and brimstone and volcanoes erupting and, demons running around on Earth, then maybe you could have a slightly more bullish, outcome than that. But I would say probably most people are not anticipating for the end of days. Now, there's a couple channels out there that for sure are, but, they haven't been in the market for 20 something years. So who cares what they think? So that being said, a lot of big factors coming up. And right now, very, very important, as we're going to see essentially big players moving in and out of positions. Say, for instance, one thing that we've seen historically quite a bit in the past is people are wrong about a situation. And then as the quarter or half wraps up, they will reposition their fund because they will have to make disclosures about where they were positioned, where they are positioned, and then obviously, net gains, losses, percentage, overperformance, underperformance of their various sectors, indexes, etc. So what we see a lot of times is the trades that have been working, people are piling into those trades at the wrong time because they're trying to make it look like they are either positioned for futures gains in those markets or in those sectors, or else they want it to look like at the end when they report their positions that it's going to look like they're actually at least were positioned in the right place, even if when you pull out your magnifying glass, you realize they've only just been positioned that way for the last few days and they've missed multiple months worth of positive price action. Now, again, the psychology and the bookkeeping aspect is something that your, new investor or, easy come, easy go investor or your strictly crypto Robinhood type investor, is not going to know about or have experience with. The actual psychology of, the big players in the space is huge. So it's very important to understand that psychology. And that's where a lot of, the older books and teachings of wise men is often cast to the side because we're not living in the same environments that we were living in the 1900s or 1950s. So what could these, old dead people possibly know? And the fact of the matter is that, you can make some small changes to their writings and easily see, okay, wait a minute, this is 99% still accurate. And a lot of times, legends like Benjamin Graham are kind of cast to the side and thought, oh, well, that worked back then. Now things are different. But the fact of the matter is, you can prolong how long things are different for, but, eventually valuations matter. Eventually psychology matters. And, a lot of Ben Graham's other principles. So that being said, let's go ahead and jump right in and take a look at these charts. But again, key principles that I think we should be paying attention to. And again, I'm not really hearing anybody talk about how important the data that's coming out is. And this is probably the most important couple weeks of data drops or data dumps that we will realistically, it's always very important and it always seems like it's like, oh, this is the big data coming out. But, this really is the big data coming out. So. Oh, so what's up, Asoto? Says Michael bought some more, I heard, at 20K. Oh, that's good. That's good. At least now he's actually dollar cost averaging down. But, of course, if Michael Saylor's buying 20K, then nobody else should buy 20K because it's probably going to 3K because obviously he's a moron and only makes poor decisions. What's up, Trader Bill? Good to see you. Yo, waddah. He says, Sailor Boy only put 10 million in, 5 million in 2 weeks. How pathetic is that? He put $10 million in? Wow, he busted his nut. He probably barely has enough to even keep going at this point in time. Maybe he's scalping. Yeah, he's getting scalped. He's definitely getting scalped. He's not doing any of the scalping. He's scalped. He's running around with, you know, exposed flesh wound on the top of his head where his hair used to be. That I agree with. So let's take a look over here. But good to see you. Glad you made it, Bill. All right, so let's take a look at 10-year Treasury. So we are seeing TNX. We're getting that pullback that we were kind of expecting right here. Basically falling back down below. Looks like the 821 are getting ready to cross down. No surprise. We obviously had our bearish divergence. So we're paying attention to key levels. If we lose this level here, which it looks like we're going to, fully expect 2.72. But let's be real. You know, at any time, we should expect TNX to just snap back. While it's temporarily looking a little bit more on the bearish side, I'm ready for this thing to just snap back at any moment. The last thing I would want to be doing is buying bonds or betting against yields at this point in time. Now that being said, 2.7 is a pretty strong support on our weekly chart. Again, weekly we're losing momentum, and again we see weekly bearish divergence on both of our indicators. And then when we check out the monthly, essentially this is what we were discussing. We basically broke above the 200 exponential and simple. As far as I'm concerned, this is extremely bullish. We have all green histograms. We're above the slope line and it's blue. We're inside the bullish control zone and the Stochs are still bullishly postured to the upside. We have the 821 cross on the monthly. We're above the 200 exponential and it's flipped blue. We're above the 200 simple and it has basically very near a flat slope at this point in time. So it's very close to flipping blue. The only thing I really care about at this point in time for the movement on the TNX is basically staying above like 2.75. If we start closing below 2.62 on a monthly, if we confirm below that, I will start, reevaluating. But in the meantime, this just looks like basically we broke above key resistance. We took out the previous high. Now we're back testing to see if it holds as support before we likely go higher. So anything can happen over the next couple months. This could kind of cool down. But the fact of the matter is, the macro has not changed. And as long as the Fed is continuing to raise rates and the velocity of the rate increases is increasing. So, first rate hike was 25 basis points. Next rate hike was 50 basis points. The previous, the last rate hike was 75 basis points. So in all reality, what do we expect? Well, probably this next one is going to be 75, possibly even 100. So we see the rate of increases, the velocity or speed at which those increases is taking place while they're still spaced out evenly, in the Fed meetings essentially, the increase in each meeting is exponentially getting bigger. So as long as that is the case, the market cannot say, it's already priced in, because in all reality, we know the Fed's goal is to get to around 3.25 by the end of the year. So it makes no sense if the 10-year is going to be below that. So the difference is how long from now to the end of the year, if we know, let's just assume the Fed is right, and they're not complete fuck ups for the first time ever, they're right about something. Let's just say they are, and they're going to be at 3.25% by end of the year, not less, not more. That means that, from now till the end of the year, we're only going to increase, and we're going to be increasing from, what are we at now, like 1.6 or whatever. We've had 150 basis point hikes so far, so we can expect basically another 175 basis point hikes, and we're basically halfway through the year. So we can assume that, if so far we did 1.5 in the first half of the year, that in the second half of the year, if we're going to do 1.75, that the rate of rate hikes is going to be increasing, obviously, because 1.5 is smaller than 1.75. So that being said, it's reckless at this point in time to try to say, oh, well, that's it, and then the Fed's going to pull back, etc. We just trust and assume, not fight the Fed, and assume that they're correct. Now, if the scenario is better, and by the end of the year they are tapering off, maybe we do end up with 3.0 or 2.75, and then we can reevaluate as we see, the rate of increase or the speed of hikes changing. But we're not seeing that right now. We're seeing the opposite. We're still seeing acceleration. So it's okay to say, hey, eventually we're going to get to the top of the hill and then we're going to start coming down the hill, but we're still accelerating. We're still foot on the gas as fast as we could go. Matter of fact, we're not sure. There's a button on the dashboard that says nitrous, and Jay Powell is looking at us with his eyes wide open like a deer in the headlights, and his thumb is slowly moving towards the nitrous button. And what happens when he hits that nitrous button? Well, the rate hikes increase even faster. So his hand's going towards the nitrous button. They're telling us that, we're going to have more rate hikes in the second half of the year than we had in the first half of the year. So why assume that he's wrong? Why assume that they're lying? I mean, they're always wrong, but usually in the wrong direction, in the bad direction. So if anything, let's just assume that the rate's going to be 5% by the end of the year then. I mean, because we know they're fuck-ups, and they always fuck up in the wrong direction. So let's just assume that they hit that nitrous button and we're at 5%. If we're going to just assume shit. So that being said, the market right now may be coming down a little bit because it essentially raced to that 3.5 level roughly, overshot, the Fed's target of 3.25. But now it's back down at 3. Maybe it goes back down to 2.75. Well, by the time we get our next rate hike, if we're at, essentially 1.6 right now, and let's just say we get another 75 point hike right there, we're going to be at 2.35. So if we're at 2.35 and then we come down here on the 10-year treasury, let's say roughly to 2.75 and retest support, well, then the market's only pricing in, another 40 basis points. So if the market's only pricing in 40 more basis points and the rate hike we're going to get, assuming is another 75, maybe it's 100, then all of a sudden the market is not pricing in the next rate hike. So if we get another 7.5 and we're at, 2.35, and then the 10 years at 2.75, and then we know we have another 75 basis point hike coming after that, well, then all of a sudden the 10 year needs to be at least back over 3% again. So that being said, it's not that long before, basically the market has to jump back up again. So what does that tell you? Well, if we know that's going to happen, let's look at our bond chart and see what can we tell from that. So here we have TLT, the 20 year. What is this telling us? Well, it's trying to bounce back up and retest the breakdown, like we discussed, retest support, and it's barely going anywhere. But that being said, when it does get back up here, if the situation we discussed plays out, and this, essentially the 10 year comes down to that 2.7 level or around it, maybe we get the move back up here on the 20 year TLT, the treasury bonds, not the yields, to maybe like 117 or so. More likely than that, all of a sudden the market has to, all of a sudden do what we just discussed, and then this rolls back over and starts breaking back down to new lows as essentially we start pricing in what could be 3.5 by end of the year, or 4 by end of the year, or 5 by end of the year. So that being said, all the people that are like, now's the time to get into bonds and bonds are looking good. Sure, there's a little bullish divergence on the bond market. I'll give you that. That's a good start. We're obviously coming up towards, we still have a few days left in the week. We only have a few days left in the month, so we can start looking at our longer term charts right here. This weekly looks okay. Definitely looks like it wants to push back up here and at least retest the breakdown. But when we really zoom out and look at the monthly, is this a bullish monthly? We lost the 200 exponential. We broke down below the 200 simple. We opened and now we're, potentially closing below that level as well. So we basically have what, a day to get back above 116 or 118 before we have now close below the 200 simple for the first time on the monthly, potentially open below the 200. I guess we technically open and close below the 200 exponential already. But this doesn't look to me like a chart that's just going to turn around and be juicy. It looks like we basically had some support here. We had a horizontal support right here. And now we're just bouncing that support, trying to find something. It looks like the guy in a cartoon that's falling off the edge of the cliff. And he's really quickly reaching up, trying to grab air while he floats there for a last second. That's what it looks like to me. And what happens? Well, shortly afterwards, the Wile E. Coyote just continues to fall. And that's what it looks like to me. So, and based on fundamentals and technicals, kind of all pointing in that same direction. So the VIX obviously still operating inside of our triangle. Nothing really changing right here. As long as we're just continuing to, basically oscillate, we expect this triangle to hold. Support 200 exponential and simple, and some ascending support lines. Resistance up here basically. We've tagged it perfectly a bunch of times. So I essentially figure as long as we're inside of this pattern, we stay inside this pattern. So what can this mean? Well, we're at elevated levels, which means probably the market is going to be going down. just because typically when we're at these levels, it's because the market's not doing well. You know, when the VIX is low, it means people are confident in the market, there's less volatility. And when there's volatility in traditional markets, it means there's people selling. When there's no volatility, it just means everybody's buying and it's just going up, you know, to the moon. So that being said, as long as we're at these elevated levels, we can oscillate and go more elevated and put pressure on the markets. We can come down lower and be less elevated and, you know, give a little to the markets. But the fact of the matter is we're still at elevated levels. So we expect further downside. And then U.S. oil. So we've been discussing, obviously, this chart, very important. WTI crude. So we have a bunch of key levels and we see very clear interactions on those levels. We have a fib in orange. We have the ascending, what was resistance that has, you know, essentially been acting as resistance and support. We have obviously the top of the channel that we just came back up and retested. So the way I look at this is blow off top, support going sideways, attempt to break back out, failure to break out, failure to hold, retest of the heart line of the channel, a bounce back up to try to reclaim the ascending support line, a bounce back up to try to reclaim the top of the channel, a failure to reclaim the top of the channel, and what looks like a daily 821 rejection before we lose the ascending support, lose the Fibonacci, and then come back down to the heart line of the channel, and then finally we come back down to the bottom of the channel, which has obviously been our target now for quite some time, which we essentially now have everything lining up perfectly. We have our green macro fib, we have the yellow bottom of the channel, we have the 200 exponential, the 200 simple, and our indicator oscillators are telling us that we likely come down here, put in another drive of bullish divergence, and then we can find some support around like that 95 to 98 range. You know, obviously 100 is a key level to watch, but as far as I'm concerned right now, this chart is playing out very, very technically and painting a beautiful picture of what's to come. So let me just fix this a second here. So then here on the monthly chart, you know, obviously we've been talking about this was our target to the upside from way back here. So, you know, at $46, our target was 114 is what I kept saying. We went slightly higher than that, but we hit our target. So, you know, we don't want to get too greedy here. Hard sell signal. We left the bullish control zone. Last time that happened, we capitulated right before Rona. You know, the last time we got as clear of a signal before that was back in 2011, the hard sell, and then we just melted down for literally decades after that. And then the only other, you know, big historic time we have was 2008, and that was the absolute top. And then after that, we literally just, you know, fell like a rock. So we don't have to all of a sudden just fall like a rock on oil, but the market is definitely setting up for a move like that. And when we look at how this monthly is closing or potentially going to close, you know, it doesn't look as bearish as it could. We don't want to see a bearish engulfing candle closing at like 104. But if we close below 104 this month, we have a bearish engulfing candle. So we have about a day. We need to stay above 104 or this starts looking very nasty. Even an indecision candle right now is at least somewhat neutral in a bullish trend. Overall, I'm still very bullish on oil and energy in general going out into the future for like years and decades. But the truth is, we could very, very easily see a couple month pullback consolidation before we go much higher. It does not have to just end right now, but it also doesn't have to just go higher from here. So the most important thing to do right now, obviously, is to lock in gains, position ourselves, and just wait and let the market tell us. But right now what we're seeing is it looks like oil's rolling over. We basically broke down, and now we have a high, then we have a low right here, then we have a lower high. So what we're looking for now is when this comes down here and we do finally find support, one of two things is going to happen. We're either going to take out the lows right here, or we're going to take out this high and then threaten this high. Well, we already tried to take out, you know, this high with this one, and that failed. So now we're in the process of coming back down. We need to see where we actually find support. We started to find support here, and that was good, but then we pushed back up and didn't put in another, a higher high. So it looks like now we're going to have a high, then a low, then a lower high, then probably a lower low. And then when we look at the macro, all it is really is just a couple of these little moves. But this is the main move. This is the next main move. And then we're in the process of the retracement of the second main move. But it looks like we're going lower. And the key area to watch, obviously, is do we put in a lower low, which is 95 right here, which is a 200 exponential and 200 simple. So the market knowing that, market makers knowing that, traders, intelligent or smart money or whatever, they know that area is the area to watch. So just like me, they're going to buy that area, assuming that everyone else is going to buy that area to at least push back up and then fail and then go lower. And then at that point in time, we can really pay attention to what's going on. But that looks like still a great buying opportunity. And, you know, patience is a virtue, obviously. So let's look at the Dow Jones. We're going to, this is going to, I'm not going to lie, regardless of what I try to do today, just because we're so close to the end of the month, and we're going to be looking at, you know, typically daily and monthly time frames. This stream is probably going to go 3 hours. Now, granted, the last few streams have gone 3 hours anyway, so it's just going to be more of the same. But there's no hope for the 1 hour streams, let's be real. But I do appreciate all you guys have been reaching out and thanking me for the static videos. There's tons more to come. I already have a few filmed. Just going to be releasing them in between days of the streams and just continually putting out learning sessions. Some of them you're not going to need. There'll be a nice refresher for many of you. Many of you can skip them. You can watch them whether you need it or not. It's always nice to have a refresher. Sometimes I will make mistakes in them. You know, I don't take notes or write anything down ahead of time. I'm basically just winging it. So, you know, if there is small corrections or whatever, I'll try to leave like a pinned comment or something like that so you guys see it. But overall, you know, they should be pretty accurate. But I do appreciate all the kind words for everybody after putting them up there. So, all right. So Soto says he's scalping. Oh, no, scrapping. Yeah. He's doing something, man. He's like, you know, right now he's a rat being held underwater. And it's not looking good for him. The bottom of the barrel for sure. Michael the Failure Sailor, he is 100%. Good to see you, Yoda. Crypto Galt, good to see you, man. Hey, buddy. Good to make it live. Glad to have you, brother. Jay Hoff says, LOL. Powell going fast and the furious. Yeah, he's ready to smoke these fools. Smoke them if you got them. Yoda. And what that means, you already know. Multiple F and F sequels, I sense. Clouded the future is not. He had 9 sequels coming our way. I actually like the old school Fast and the Furious movies, but they also came out at like a super relevant time because like my buddies and I were definitely like those car guys putting turbos on everything and nitrous and all that good stuff. So, you know, the more recent ones are a little more of a stretch. I think the last one took place in space, didn't it? In Elon's car that he flew up there. It was like the first Tesla. I can't remember. I'm not sure if I saw that one. So anyway, Dow Jones. So on the daily, we're getting the hard buy signal. We left the bullish control zone, bunch of green histograms, and it's like, oh, that doesn't look too bad. But then when we really look at what's going on here, we're below the 200 exponential and simple, clearly in a daily bear market. We're in this giant descending broadening wedge, you know, clearly bearish. We came down here, we touched key levels, which was the pre, you know, Rona dump right here. And then obviously we just back tested the 236. So all this is just continuing to melt down, in my opinion. As a matter of fact, the meltdown is accelerating. Oftentimes, you will see me put these parabolic trend lines. So we have this daily yellow resistance line right here. I think it's appropriate now to assume the speed or velocity of the downtrend has accelerated. So now we'll put one right here, and we'll color this one orange. And we see from this point to this point that is the next resistance we need to get above. So we can chop around here for a little bit. We can come back up and retest it. But until we break out of that, it just looks like we're actually just accelerating to the downside. And, you know, we're getting closer and closer, you know, to the elusive bloody waterfall. Actually, it's not elusive anymore. It used to be elusive. Now it just happens every day because the markets look like trash. And then switching over to the monthly, you know, we've been paying attention to this, obviously, for some time. And the importance of, you know, the meltdown that occurs when the 8 and 21 cross the downside on the monthly. We had it in 2020, Rona dump. We had it in 2008, you know, global financial crisis. We had it in 2000 for the, you know, dot-com bubble burst. So we're about to do the one thing that we've done only the 3 other times when price action completely melted down. And all 3 of those times we went into, you know, horrible recessions afterwards. So for anybody that's like, we don't see any recessions in the near future, there's no signs of recession here, we don't think a recession is unavoidable, all those people are fucking morons. Obviously, we know that. We have all red histograms. We have lost the slope line on the TDMACD. It has now turned red. We have a hard sell signal. We have left the bullish control zone. And it looks like disaster is coming. And the speed of this disaster is accelerating. This is the biggest red candle we've gotten since, you know, the meltdown before that. So, you know, obviously getting more and more bearish. We're looking at, you know, the last monthly, we had a monthly close on support. We had 2 touches on support with a wick, then a monthly close on support. Then we had, you know, a wick down and then a close on support. And now here we opened at that support and now we have melted down. So, you know, we're 1 day away from posting our sign. And what is the sign? Months without new lows Zero. Reset the clock. Okay? Because everybody was calling for, you know, the lows are in. Well, try again next month, losers. And as far as the weekly chart, you know, obviously this thing has been melting down. We hit our target perfectly, beautifully bounced off the 200 exponential. We know that the traditional market does not respect the 200 exponential. That's for us crypto moon boys. So we know we're probably going to at least the 200 simple, probably much, much lower. So everything still pointing to the downside. Sorry about your luck, moon boys. SPY on the daily, again, just continuing to melt down. No surprise here, trying to show some bullish signs on the daily, but that's just not the case. Broke down from the 236, still hitting the descending, broadening wedge bottom. Again, we see the trend is accelerating. Before we had the yellow slope line acting as resistance. Now we have the orange slope line acting as resistance. We know that it's just getting the, you know, here we had just kind of a slope to the downside. Here we definitely have like a stronger slope to the downside. And then the next step after that is what I like to refer to as the bloody waterfall, or in this case, you could call it the round trip, whatever you want to call it. If you're not sure what a round trip looks like, you know, you can look at Cathie Wood's ARC stocks, but it basically just means all of a sudden we just completely fall out of bed and go straight down to our support level. In this case, 339. Now, you know, all these markets essentially look very similar or the same. We do have the 382 at 355. If we switch out to the weekly, you know, all these markets basically look the same. They're just in various levels of meltdown. Some have already melted down, like Cathie Wood. You know, some have started to melt down. Others have, you know, barely melted down. And then you have some things that are, you know, holding up fairly decent in relation, but very, very few things looking extremely bullish. Even energy now, you know, the easy trade no longer looks good, as we have basically just dumped our bags on everyone's head. So that being said, if we look at this weekly, we hit the 200 exponential. We still have not made it to the 200 simple, so that is obviously still our target. Still completely melting down on the weekly. We see no signs of bullishness, just a dead cat bounce off of support. And then here when we come out to the monthly, again, we didn't even get the cross in 2020. We have the 2008 meltdown where the 821 crossed. We have the 2000 meltdown, or it's technically the beginning of 2001, but you know, it's 2000. You know, that was what caused it. It was just a matter of getting there. But anyway, this is our monthly on the SPY. And again, we are very, very close to that cross. Again, we held up at support for a little while. We melted down. You know, this, again, we put in not only a new wick low on the S&P, but we're 1 day away from a new close as well on the S&P. So, I mean, complete meltdown, looks like complete trash. And, you know, we would fully expect, obviously, the complete round trip at about 325 in the very near future. Hard sell, left the bullish control zone, all red histograms. Still have blue slope, but we're below it. Looks like just a matter of time before we lose the slope line as well. Again, complete trash. Anyone that has been calling for the bottom, predicting the bottom, buying the dip, expecting the bottom, obviously has been proved wrong. So we'll post up the sign tomorrow. 0 days, 0 months, I'm sorry, since new low. So obviously just atrocious. These charts look absolutely atrocious. The only people that could look at these charts and say they look good are people that are buying with a 5-year time horizon and looking at a 4-hour chart. And, you know, those people are obviously retards. IXIC, and no offense to any actual retards. I don't mean, like, if you actually are, like, retarded, you know, that's fine. Actually, like, you're cool. But the people that have normal functioning brains or should, but act like retards, those are the people I'm talking about. And I'm not using it in a derogatory sense. I'm just saying that, you know, someone that's born with a natural handicap is probably more intelligent than you. Not you, but, you know, you people. Not you people. I mean, but like, you know what I mean. YouTube loves me. IXIC, NASDAQ composite, again, just completely melting down. When we look at our daily chart, we see this thing is just, you know, taking a quick dive. Obviously just further in the cycle than like the Dow Jones or the S&P. You know, bounced the slightly front ran the 0.5, came back up, retested the 382 as resistance, and it looks like we're going lower. We bounced the 200 exponential and simple on the weekly, which we'll check out in a second. But we have the 0.5 at 10,350. We have also right around 98.66. That is our Rona high. So again, round tripping it. We do see again that bullish divergence, but you guys know I like to wait for 3 drives of bullish divergence before I really get excited about stuff, and I like to see it on the weekly or the monthly is when I really get excited. But here we just saw a perfect retest of the 200 exponential, let go of the 200 exponential after a push back up, and then we came down to the 200 simple. Well, that looks like what the other charts are doing right now. They just haven't got to the 200 simple yet. And then after that, what happens? Oh, we retest again, and then probably just go lower, and then eventually, again, this just continues to develop. Bearish control zone, very weak. Just looked like a pathetic dead cat bounce to me. And don't get me wrong though, that's our target. And while we set targets at downside, it doesn't mean as soon as our target gets hit, now we just immediately buy. A lot of times we hit those targets and we're actually buyers because we're closing shorts or we're taking off hedges. So we're not necessarily all of a sudden going net long. Maybe we're just going from net short to neutral, or, possibly neutral to long, depending on the setup, etc. So it's important to know, like, it's all relative. And then on the monthly chart, we see, again, unavoidable new lows on the monthly. So, put the sign up, okay? 0 months since new lows, because we did it. We did it again every month for the last, 7 months. We have continued to just put in low after low after low. So if you want to pick which one's going to be the absolute lowest, by all means, go ahead. But, if you did it so far, you were wrong every month. So if I had to guess and you were like, hey, so do you think the new low is going to be in July? I would say, sure. And if you said, do you think that's going to be the last new low? I would say, of course not. And, why not? Well, because the trend is down. 8 and 21 about to cross the downside. Last time we saw that happen, 2008. Time before that, we saw that happen, 2000. So we know that when that 821 crosses down on the NASDAQ, it leads to a meltdown after that. So what happened so far is a meltdown in a lot of stocks, but the overall index has not melted down. So if this means the overall index melts down, what does that mean for Cathie Wood and her stocks? What does that mean for trash bag cryptos and probably Bitcoin as well? It probably means they're going to fucking melt down. So you're like, yeah, they can't go any lower, bro. They're already down 75 to 90%. And I'm like, okay, yeah, you're right. Your $100 stock is now down 90%. So it's worth $10. Well, I bet it goes down another 90% and then it's worth $1. And then maybe it goes down another 90% after that. And maybe it's worth 10 cents. And that's what crypto charts look like. So we'll see what happens. I would love to be wrong because that means it's going to be easy money. The easy money is made on the upside. I love easy money. I love bull markets. I love just being, a lazy bum and just buying whatever I throw my dart at and it hits. I don't have to use up, my magic 8 balls energy to predict what the markets are going to do next. I can just every day wake up, look down and say, well, still got wood. We're going up, baby. Let's go. But obviously that is not the case. So now we have to actually use our brains and, protect our principle. And the fact of the matter is everything is pointing down right now. So sitting here and trying to call the bottom is just, ridiculously reckless. And if we want to look at my one main leading indicator that I use for everything, that is obviously the knife. And the knife obviously is absolutely amazing. We see the knife right now is at 15. We see that in the 2008 meltdown, the knife got down below 0. It went to -2, which it can go negative. It can go very, very negative on shorter time frames, but does not usually get down to these levels. It went down to 1.5 in 1990. Went down to basically about 20 in 2000. So we see, on this chart going back to 75, we see that, we had one knife touch down here at about 1.5. We had one knife touch down here below 0. And now here we are, basically at 15, which we have only a couple more times when we've even made it to this level. So we're already looking at likely the third worst, knife on this entire chart. So that being said, the knife is a leading indicator. So if the knife hasn't even told us that we've hit bottom yet, I don't see any reason we should now assume all the lagging indicators are telling us we've hit bottom. Definitely not, obviously. So that being said, this looks like complete meltdown. Hard sell signal left the bullish control zone. All red histograms, red slope line, 821 about to cross. How nasty does it get? Well, we'll have to see. But, it's accelerating to the downside. Does not look good, obviously. Russell, the old Ruddy, the 2000, the trash bag index. The index I wouldn't invest in with your money, if you know what I'm saying. Obviously, we had this one descending resistance that was kind of acting. It was acting as resistance for a bit there. Wait, what is it? Oh, no, I'm sorry. This is not a resistance. This is the next leg down. That's what that is. Sorry about that. This is just basically our flagpole, our consolidation. and then we break down, and it's just a repeat of the initial flagpole. So it's not scientific or anything, but it points us to the 0.5, and we've made it almost down to that point already. So that being said, we have essentially a little resistance here in orange. We're at the 382, kind of hanging on. We're kind of hanging on at that 2018, 2020 peak. We have quite a bit of support around this level, but I don't expect to just drop through this one. It already had its big drops. I think it's just going to chop down and bleed out. It's like, Jerome Powell just held the gun to, a mythical cartoon image's head and pulled the trigger, and, it's still existing on Earth temporarily, but it's just a matter of time before it, goes much lower or dies or goes into its full-on zombie storm, eradicate speculation, so to speak. So the Russell is just a bunch of zombies all put together in a single index. And we know with the cost of capital going up that we're already seeing crypto, zombies implode, and we're seeing, stock zombies implode. And it's basically just a matter of time before the, trash bag, small market cap zombies implode as well. So fully expect cruise line bankruptcies, more bailouts for various industries, lots and lots of small businesses continuing to go under, retail completely melting down, hedge funds blowing up. Fully expect all these things to continue happening. Crypto projects failing left and right, exchanges, halting withdrawals because they're illiquid, trying to create more Ponzi schemes to pay money to pay the first people that got Ponzi schemed on. If you don't know what I'm talking about, obviously just another day in crypto, nothing big, just regular crypto stuff. Russell on the weekly has lost to 200 exponential and simple. We have officially confirmed into a bear market on the 200 exponential and simple weekly using my metric. Absolutely atrocious. We did that slightly right on the COVID meltdown, but the last time we actually did that was back here in 2008. So again, we're seeing something that happened in 2008. We're seeing something that happened and only was saved by $10 trillion in fiscal and monetary support. And now we have round tripped it. So how long before we didn't just round trip the peaks and we round trip the troughs? Well, probably not long, especially on the Russell, because obviously it's a bunch of zombies. So get your stakes out and your silver bullets. Nope, that's not right. Get your, machetes? What do you have to do? You got to chop the head off the zombies? Jesus, I can't even remember. I think you got to cut off their heads. So get out your machetes, or your scythes or whatever it is that you're going to be decapitating zombies with, because that's what's about to be happening in these markets as far as Russell 2000 is concerned. In my opinion, obviously none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. But also, don't be a zombie in the fact that you're listening to the, zombie talking heads or influencers either. So XLI, but you guys wouldn't be here if you were doing that stuff, because those people only like to hear what makes them feel good about their position that they're down 97% on, or 75. I shouldn't exaggerate. 75% on. And that's an actual statistic. I think the average retail investor over the last, I think the average retail investor is down like 50% or something like that. And the average person that invested for the first time in the last like 3 years is down like 70 to 90%. I think it's something like 60% of all Bitcoin wallets now are upside down on their positions. It's just all bad. And it's exactly what I said. I predicted this happening during the bull run still taking place, how we expected basically this was going to be a massive liquidity event where they draw in a bunch of people that were not previously in markets, whether they were young or minorities in the market or minorities in, on Earth, as well as, women that are not typically as there's lots of women in the market, obviously, but most women were not. There was a much smaller percentage of women participants. So basically, it's just the same thing that happened in the 1920s. You get basically everybody to pile into the market at the absolute worst time, and then they just get wrecked forever. And I've actually experienced that myself because I got involved in the markets back in the late 90s, and I was so blessed as to experience what an absolute market meltdown feels like when you've only been in the market for a couple of years and everything goes extremely, extremely negative. So that being said, XLI, industrial sector melting down. We just round tripped it very clearly in a bear market. Again, the daily is trying to do something, pouncing up and then just getting completely rejected. Weekly, just bouncing off the 200 exponential and simple, where you would expect to find support, obviously. And then monthly, getting ready to have the lowest low candle close, the 821 cross. And again, complete meltdown, same like we saw at those same periods in time. And again, much further downside potential looking here. So each one of the indexes looks absolutely horrendous. And now each of these sectors, as we'll see, looks various degrees of terrible. XLP, consumer staples, nice little bounce right here. We know that this is one of the safety plays that everybody's going to rush into. Obviously, we're seeing that happen. This dead cat bounce basically is the reversion to the mean, the retest of a 200 exponential and simple before we go likely lower and confirm it to the bear market. So look at this. XLP has not actually confirmed into a bear market yet, technically. This is our last bullish play, the one that's in play, before we get the reversion to the mean, fair value, rejection, and then continue lower. Historically. Obviously, we don't know what's going to happen in the future, but got a pretty good idea what the charts are telling us. There might be a breadcrumb or two, and they're leading into a dark hole, and that dark hole has got a big drop at the end of it. So we don't know, though. We haven't went in the dark hole yet, but we can assume based on the last 1,000 times we saw a dark hole. XLP on the weekly, obviously we're still a little ways off the 200 exponential and simple. We're still a little ways off that 2020 high. We are building momentum still to the downside, even after that dead cat bounce. And then on the monthly, again, very close to disclosing a new low while we're still hanging on to those moving averages. And this looks much better. It's basically just the cleanest dirty underwear in the hamper. All right. And there's no stains on it yet, but I mean, you really trying to wear dirty underwear? Not me. So that being said, hard sell, left the bullish control zone, multiple red histograms. Now we're basically closing at the 21. So maybe we get a bounce back up over the next couple of months, and we come down, then we close below the 21, then we break down from that, and then, then we'll be talking about, one more month like this, and then 821 cross the downside. I mean, we see the same thing happening over and over again. And when we look at the monthly chart, we see it happening in slow motion. And it's very obvious when you look at it on a monthly, but if you watch it on the 4 hour or the daily, it's like, oh no, this could actually be the bottom. But you're not, it's like that forest for the trees metaphor. Speaking of forest for the trees, the old FFT, let's just say that be careful who you listen to, because some of these moronic people have been calling for the top in the DXY literally for the last 5 years, and it's only just going higher. And, if you counter trend people that focus on the FFT or the forest for the trees, you'll literally have the best trades in history, because, let's just say this one analyst, maybe the worst, or one of the worst probably. But anyway, XLF, no offense, Luke, you just suck at your job, obviously. XLF, obviously, melting down here. Speaking of people that suck at their jobs, Negri Granarino, I'm sure, is, massively upside down once again in one of his calls. I'm sure his group is full of zombies, people that have already lost their money, blew out their portfolios, or massively upside down in their positions, since everything he literally says is wrong. Once you can't just buy anything, it's very clear who's swimming naked, in the words of old Warren Buffett. So XLF just completely melting down. We see basically we went from a descending broadening wedge to now a descending wedge. It's getting tighter and tighter. The velocity, the speed of the decrease is increasing. Crash down to the 200 exponential and simple, on the weekly, retesting the 2020 highs, now acting as temporary support. And then when we just zoom out, XLF getting ready for that cross, new monthly low, 0 months without incident. Get the sign. I mean, how long before this thing just completely melts down? There's quite a bit of support at this level. So I would expect, more of a little stair step, a little more like slinky theory, and a little less bloody waterfall. But who knows how nasty this thing's going to get. All right. So XLRE, real estate, again, holding up better than some, consistently just putting in those new lows. So obviously we hit our nice target for this short trade right here. Basically hit that fib level perfectly, the 382, came back up, retested the previous high. So this thing has not only round tripped to the highs before the Rona, but it actually went below that and then retested what was resistance as resistance once again, and it looks like it's ready to go lower. So I would expect our next big move to the downside to take us to about 36. At which point in time, that'll be the macro 0.5. We do still have bullish divergence, but, obviously we can get multiple drives of bullish divergence and barely see anything happen because it's counter trend. Weekly, we're retesting 200 simple and exponential. Still looks terrible. Monthly, we are literally about to get, well, we still have maybe another month before we get the cross. But again, nasty, accelerating to the downside, hard sell. I mean, just looks terrible. And what do you expect? Obviously, with rising rates, while we also have record high prices, that's literally record high unaffordability or record low affordability, if you want to use actual English that makes sense. XLB, so healthcare, again, one of those big safety plays, just confirming into the bear market, basically broke down, reversion to the mean, fair value, 821 crossing back to the upside. Everything looks gravy. We're starting to go to the upside. We're ready to just take off. But realistically, probably not. Basically just a dead cat bounce off a new low. So we have a high, we have a low, we're retesting, fair value. We're likely to break down and go lower. I would expect like 112 or so as our target to the downside. Obviously the 382, from the low to the high, and then we have quite a bit of support actually. So again, this is, clearly overperforming, and by overperforming, I mean, it's just not losing your money as fast, which is basically what you would expect from healthcare. We talked about that way before it was ever even relevant. Obviously, there are 4 main areas that people go to. They're looking for stable area they can put their money and get yields on it. And, obviously, dividend stocks that are less volatile and, more of a necessity. Things like, obviously, healthcare, consumer staples. We talk quite a bit, obviously, about all of these different things. All right, so the monthly chart is still holding up much, much better. Obviously here, we're just now really starting. I mean, we still have a new low close, and a new wick close, but we're holding up much, much better. So I don't expect us to just suddenly break down below 125. But what is that? It's a couple percent. It's nothing. Hard sell signal left the bullish control zone, all red histograms. It's holding up. It's doing its job. Congratulations, healthcare. You're doing your job. XLB, material sector, again, just completely melting down. We obviously see bear market broke down from that key support that we had been holding on to for some time. Once we broke down from that, we hit the 236 perfectly. Next started to downside, somewhere between the 382 and the 200 weekly exponential and simple, right around like 71, 67, 65. We got a nice little cluster of stairs on the way down. But again, losing that was obviously very important. We have left the gap here, so we must come back and fill the gap one day. Is it going to be in 9 years? Is it going to be a week from now? I mean, we don't know. But I'm not just going to bet on filling the gap when it might take, a decade. So that being said, still looking very, very weak. Then when we switch over to the monthly, we're starting to see real weakness develop. And this is what I would expect in the near future in some of those stocks or sectors that have been holding up well. All of a sudden, we're just going to see the, oh, wait a minute. Oh no, the economy is actually trash now because higher prices. Oh, they do still kill demand. Oh, all the stuff that has always made sense and factual for the last, since the existence of Neanderthals on Earth, all that's still true. Yeah. Okay. Yeah. So it's not different this time. Okay, that makes sense. That does make sense. So actually, yeah. All right. So just the same thing that's always happened is going to happen again. So obviously, we're going to start killing manufacturing, killing production with higher prices and higher taxes and all this good stuff. So then, but wait a minute, that's not possible because wage spirals. Oh, okay. So they can't fire you. You're okay. Yeah, you can't roll back. You can't roll back raises once you pay people more money. It's not possible. So wages are going to spiral out of control. Oh, it doesn't matter how much you were paying them because you just fired them instead. So now you're paying them zero. Oh, okay. So I guess another thesis completely disproved. Huh? That was easy. All right. So anything else? Any other brain busters? It blows my mind how stupid these people sound. You can't ever pay people less once you pay them more. I'm like, really? You never had a good job and then a shitty job afterwards? Oh, you have? Oh, we all have? Yeah, there's a reason for that. It's because the economy slowed. so you couldn't get that good job anymore. And then, I mean, think about all the people, think about all the misallocation of resources in the crypto space. You know, some of our best people on planet Earth are working on Cumrocket. Well, probably not Cumrocket in specific, but I'm using that as an example to represent all of the trash in cryptocurrency. So if we have good developers on Cumrocket and then other companies, you know, have to hire subpar developers, and then all of a sudden the economy slows down and now there's a better developer that'll work for less. You know, you don't think that all of a sudden that developer is going to get your job and then, you know, you're going to be slinging cappuccinos at Starbucks? You sure are. You sure are. XLV, I mean, just looks terrible. Complete meltdown. If it closes right here, I mean, it's going to look disgusting on the monthly. It's going to look absolutely disgusting. Next, we have XLY, so consumer discretionary. Obviously, we expect this to overperform to the downside or, you know, just lose value at an accelerated pace. I've been talking about, obviously, that since before the top and predicted this beautifully because this has taken the biggest hit out of most of these things. And we see it went absolutely parabolic in comparison to most things, and it gave back everything. Full round trip. Woo-hoo! Next stop, where we started. All right, so we bounced that area, little dead cat bounce, you know, little bullish divergence, you know, a little hope, and that hope was crushed. The dreams are dead, and it turned out it's actually a nightmare, and you're on Elm Street, and Freddy's coming for your ass. So weekly, obviously hanging out at the 200 exponential and simple, just looks terrible. Bears in control for week after week after week, and then we go out to the monthly again. 821 about to confirm the bear cross on the monthly. Absolutely horrendous. Hard sell, left the bullish control zone, all red histograms, red slope line. Months without a new low. Get the sign. Here's your sign. If anybody ever watches redneck stand-up comedy, I'm sure you got that one. A little Jeff Foxworthy. He's a funny motherfucker too. XLU. So utilities, again, this is another safety play. We see it as outperforming, but it has broken down, confirmed a bear market, retesting, you know, return to fair value, reversion to the mean. Obviously, we had broke down. Oh, sorry. Don't you ever go to the 15-minute chart again. Disgust me. And we see, obviously, we've just been operating inside of this giant ascending channel forever. We've been hanging out at the bottom of it and, you know, having resistance on the top of it since basically the breakdown in 2020. So as long as we're operating in that, I would just expect us to continue operating in it. Now here it's starting to look a little nasty. So I think it's likely we're coming back down to at least retest at 236 around like 67. Again, this is a safety play. And as it holds up better, even if it's not performing well, you know, as in making gains, if it's not losing all your money, people will continue going into this. And, you know, again, it will continue holding up better than, you know, more speculative items. When we look at the weekly, again, we lost 821. We're coming back up, just now retesting it. Now, keep in mind, this is the weekly. A lot of other stuff's already crossing down the monthly or preparing to. This is the weekly. So this is holding up very, very well. Unfortunately, we lost key support, which was that previous resistance. And now we retested it as resistance. That's also the weekly 821. So more realistically than not, we're headed to 63. And on the monthly, again, this is holding up much, much better. Still looking like, you know, basically our first lower close on the monthly likely to print. And again, we are now seeing what we don't want to see, which is monthly bearish divergence developing on a lot of these things. And when that monthly bearish divergence plays out, will you get something like Bitcoin? Because Bitcoin was the last time we were specifically pointing out monthly bearish divergence. And that was when Bitcoin was worth $70,000. And now Bitcoin is worth $20,000. So I guess that monthly bearish divergence stuff really works. Next, we have XLC, communication sector, completely melting down. You know, arguably the worst sector in existence, full of complete trash. I mean, you could say that it's, you know, the go woke, go broke mentality possibly playing out right here. I would say probably has something to do with that. But we see the daily meltdown resume. Not only have we completely round tripped it, we actually made it all the way to the 618, completely looking like trash. I would expect now this 57 level, 58 level to act as resistance. And then, you know, eventually, how long before we're at 46? I mean, probably not that long, honestly. I mean, that's what I would expect. We bounced the 618 perfectly. Before that, we bounced the 382 and the 0.5. Before that, we bounced the 236. I mean, if you give tech one thing, it's trading very technically. So on the race to zero, it's winning, and it's doing so in a very, very constructive manner. So congratulations on your trip to zero. You're arguably in first place. Just right behind Kathy. She's just slightly outperforming you to the downside. But, you know, I mean, she's obviously, she's a treasure. They don't make them like Kathy. The closest thing we have to a Kathy Wood is probably Elizabeth Holmes. And I think the big difference is intent. I think Elizabeth Holmes, it was intentionally a scumbag piece of shit. Kathy Wood is just, you know, scumbag piece of shit. But not intentionally. I think she has good intentions. She's just fucking horrible at her job. And people gave her a lot of money to be horrible at her job. Which is okay, because there's a lot of people that are terrible at their job. You know, sometimes, you know, I get a Subway sandwich and it's made poorly. And, you know, I'm like, hey, man, that Subway sandwich that I just got was made like shit. That sucks. It happens, though, you know. So the difference is, you know, she's just running, you know, a, $40 billion ETF. No big difference, really. Just shitty at your job and just a better job. That's all. Nothing wrong with that. XLC on the weekly communication closing below the 200 exponential and simple just looks terrible as long as it's below this resistance. Not putting in a new monthly low. No, it is. It's completely melting down. That's right. So yeah, complete trash. We'll see what happens when we get down here. I mean, this thing is completely melting down. And, you know, if you really want to see how bad this looks, like literally nothing else where the histogram is below zero. Just to tell you like how atrocious this is. The bears are literally in full control right here. So again, trading very, very technically. So we can technically assume that it's going down to the 786. So I will see you at $46, trash. XLK is next. Tech, obviously, you know, we look at the NASDAQ and everything. So just right in line, basically, just completely melting down. Again, we see not only, you know, the red resistance, but we see the acceleration of the downtrend taking place. And now oftentimes these will result in some of these beautiful bear market rallies, you know, or a bullish bounce in a bear market once we break through our acceleration of the downtrend or a parabolic downtrend. Because eventually what happens is, let's just assume that this trend continues accelerating, and then our next line just speeds up even more than that, and then the next one, you know, just speeds up even more, and we're just basically going straight down. So it's only sustainable for so long. And then that's when you get, you know, once you break through that resistance or that resistance or that resistance, you likely come back and retest the last one before it. And that's when you usually get like the moves back up, the bullish moves in a bear market. You're going to continue to the downside for sure, but you're getting essentially what amounts to a relief rally. And that's essentially what I, you know, expect to happen. Matter of fact, I mean, we can leave. I'll switch this one to yellow. You know, as it, I do weird things with the colors. You can do whatever you want, but I look at it as like yellow is like, oh, we're going to the downside now. That's not good. And then orange is like, uh-oh, starting to go to the downside a little faster now. It's getting a little nasty. And then red is like, oh my God. So, you know, and again, the red at this point in time, not nearly as significant, but just for, you know, hypotheticals, we'll leave it there as we basically get squeezed into this. And the difference is, you know, the relief rally is if we break to the upside through that resistance. The bloody waterfall is if we break to the downside through the support. So, you know, we don't know what's going to happen, obviously, but XLK, you know, we basically confirmed into the bear market, and we still haven't had a reversion to the mean. So at some point in time, we could shoot back up to 144. Now, it's a 10% move, though, and there's over a 10% move to the downside likely to happen. So even though we have some bullish divergence on our daily, it still looks like trash. The weekly, you know, we're basically just about to get to that 200 exponential or simple. Very, very close. Bears still in control. This tried to move back to the upside and got rejected again. You know, we start to see this round out. People get bullish and it gets rejected. Starts to round out. People get bullish and then it gets rejected. We really need to see some signs of it actually bottoming before we just start getting excited. And then again, the monthly, very close to closing to the downside. Hard sell, all red histograms. Looks like trash. Looks really trashy. But obviously, something like the XLK is holding up much better than something like the NASDAQ. So, you know, arguably, you know, whatever they're doing is obviously working out better. At least the composite anyway. XLE. Okay, so energy, we were talking about what was going to happen in energy. You know, I'm not going to sit here and say I told you so, but we did get lucky on this one for sure. And it seems like the harder we work, the luckier we get. So, you know, I guess there's some sort of positive correlation between, you know, working our ass off and getting lucky. So maybe it's not luck after all, but, you know, according to the magic 8-ball, it's luck. So you're not getting my 8-ball. So XLE obviously on the daily down at the 200 exponential for the first time in some time. That was our initial bounce back here in December. And then this was our second bounce since we confirmed, you know, basically bullish here. Now, this looks to me like the completion of the 5. We don't know for sure if that's the case, but it sure seems likely now. When I go to the bottom of the 1, the bottom of the 4 right here and take it up to the top of the 5, that basically is our fib that we're paying attention to now. We blew through the 236, we bounced the 382 perfectly, and also the 200 exponential and simple on the daily. So again, that's where we would expect to find some support. We also have the macro fib in orange. Now, we would expect essentially a lower high and then eventually roll over. We are very, very low levels on the daily. If we go out to the weekly, we get a little different of a picture. The weekly is starting to get tired, but actually what's the weekly really telling us is that we're extremely bullish. We're very, very bullish. This chart looks phenomenal. This is literally the best time ever for us to take entries when we see this taking place. But when we're looking at it on the weekly, we know it was a great place to enter at 54 back here in December, or it's going to be a great place to enter, you know, at maybe 59 or 55 or something like that, probably like towards December this year, maybe sooner. We don't know for sure. But this is just now, this is the bullish reversion to the mean. The same way we keep getting all these bearish reversion to the means when we break below the 200 exponential and then we retest it before we go lower. This is the break above the 200 exponential and simple before we retest it and go higher. So this is the setup we want to see on all of our charts that are going into a long-term bull market. But even though this chart looks great, it looks very likely that we actually get an entry down here around, you know, the 618, which is obviously our goal. So we don't want to get greedy with this because, again, it has been overperforming. So we don't want to miss the trade because we're looking for the perfect entry. But when we zoom out here and we look at the potential that this is the completion of a 5 wave before, you know, we maybe go much higher, the fact of the matter is when we start looking at the macro, we haven't even confirmed this is a top yet until we hit the 236. So we expect to hit 67.37 and then put in a pushback up, a lower high, and then come down for the legitimate retrace. Which the legitimate retrace would be the 200 exponential, the 200 simple, and the macro 382 from the bottom to the top. Assuming once we confirm the 236, we can start assuming that's going to be the case, which seems very likely based on confluence. Now, it is possible we get down here to the 0.5. I don't think it's nearly as likely, but it is very possible. We could even come to the 618 and still have a bullish move back to the upside. But essentially what we're looking at right now is basically something like a ABC correction taking place. Now, we don't know exactly how this is going to look because it's still a little too early to tell. But let's just assume, you know, we bounce, let's say the 382 or the 0.5. We get like a little pushback up here to one of these other key levels for a lower high. And then eventually we come down here to our low. Well, once that happens, we don't have to just all of a sudden be like, oh man, this thing's melting down. We don't want anything to do with it. Matter of fact, it might be just the opposite because that's actually going to be our best buying opportunity. Because when we really zoom out and look at what's taking place, what we're actually seeing right here is this is actually the 5, sure, or it's the 1. And this is actually the ABC correction, sure, or it's the 2. And then if we're right about that, you know, then we can really start looking at this monthly chart and getting some pretty nasty, in a good way, targets to the upside. You know, maybe a 1.236 extension, a move back down to retest that break, you know, and then a new high after that, maybe as high as the 1.618, you know, of these macro levels. You know, we don't know exactly how this is going to play out, but essentially something like that. And this is basically, you know, when you look at Fibonacci, when you look at Elliott wave, they're essentially these repeating patterns over and over again. It's like when you take like the one piece of the honeycomb and then you look at, you know, surround that one with the next, you know, layer of honeycombs, and then all the honeycombs that are surrounding the one honeycomb form the second honeycomb, you know, like a larger pattern but the same shape. And then you do the same thing again with a bunch of those larger honeycombs, and they do the same thing. And it's same as a seashell, same as, you know, the honeycomb in a bee's nest, etc. And it's just that never-ending series of patterns, which is where like the Fibonacci numbers come from. And that's why this just happens and works so well over time, is because it's inherent in like actual nature. Now, could we go much, much higher than this? Yeah, I'm not actually like figuring out like targets or anything like that. I'm just, broadly putting this out here. So that being said, realistically, the retest of previous all-time highs on energy is really just that one, which is just $100, which we slightly fell short of. So it's not unrealistic to think that we could get, a much, much higher target for our next 5 waves to the upside. The most important thing to just pay attention to is the same way this 5-wave structure formed the 1 and the ABC formed the 2, we would expect another 5-wave structure similar in nature to form our 3. So if we just copy this and we just take it and just assume the exact same thing happens, where does that take us to? Well, it takes us up to about the 1.5 to 1.618. So in all reality, maybe the 3 is actually going to be up here, and then the 4 eventually comes down here, and then the 5 goes, maybe to the 2.618 or much, much higher than that. So, we don't know what's going to happen yet in the future, but we can use our fib extensions to target that. And if you didn't check out the static video that I released a couple days ago on our, fib internal retracement, fib extensions, and Elliott wave, breaks down all of this in great detail on the Bitcoin chart and talks about potential, bullish and bearish case scenarios. But when we look at this on the monthly, I don't think it's too unrealistic now to think we could be very, very bullish on energy on the monthly, but also very bearish right now short term. Because again, we're about to cross out of the bullish control zone and get a hard sell signal. And again, the last time we really got one was right here before the meltdown that led to the lowest low ever, the negative, and then we have the hard sell coming out of 2014, which was the previous all-time high. We have a hard sell coming out of 2011. We have a hard sell coming out of 2008. Each time it has led to one of these just horrible, horrible sell-off, followed by a nice grind back to the upside. And again, I'm very, very bullish on energy. I'm very confident that, 3 to 5 years from now, or 10 years or 20 years from now, this is much, 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 much higher. But it doesn't mean that we don't go into recession first, and this doesn't drag its feet for a couple months before that takes place. And as a matter of fact, that is my base case at this point in time. So I'm very, very, I've been taking profits on energy. I'm very, cautiously pessimistic. Okay, because we don't want to just miss another parabolic move to the upside or miss the next parabolic move to the upside. But we can see what this is spelling out for us right now, fundamentally and technically. All right, almost done with the sectors. I'm going to jump back in chat. We'll take a quick break for a drink. Or you guys can make some popcorn because I'm about to lay into some people. I'm just kidding. I'm nice all the time. XTN, transportation. So obviously, that same just descending pattern. We see again the acceleration to the downside just starting to pick up. And again, look at that for a potential break for an upside potential. But what's really happening? Well, the opposite's happening on this one. We talked about how we could either fall through the bottom and have the bloody waterfall, or we could break through the top and have the dead cat bounce. Either one seems possible or probable, but it looks like, this thing's ready to let go from the bottom. Now, maybe that changes. The reversion of the mean technically hasn't really happened. I mean, it kind of happened here, but I liked it to get a little further away and then see that last big push up, maybe to 84. But, we're at 68 now and just barely hang on to support. Barely hang on. And again, that yellow level, it's the same levels on everything. And this is the same thing. We see 3 macro cycles, basically a channel to the upside, meltdown, channel to the upside, meltdown, channel to the upside. In the process of the meltdown, we have lost the 200 exponential, barely hanging on to, / lost the 200 simple. Bears are completely in control on the weekly. When we zoom out to the monthly, 821 about to cross, acceleration of the trend to the downside, months without new lows, get the sign. Hard sell, all reds, looks like trash. Transportation's going to zero. XSD. So semiconductor ETF, again, very much confirming into a bear market. We know that energy, we know that transportation, we know that semiconductors, and we know that the 210, inversion and rolling over are basically, undeniable recession indicators, and they're all prior to the recession taking place. And we know they're all just flashing. They're not even flashing anymore. They're on fire. Okay? So, I mean, this thing looks like it's just ready to completely melt down. Again, just dead cat bouncing the 200 exponential. see at the 200 simple, 136 seems very likely. That lines up right around with the 1.5. And then, of course, we have key levels. Maybe the bottom comes in around the 618, the previous all-time high right here. Or just maybe this thing gets absolutely nasty because it's been in a parabolic bull run since 2008 and never truly corrected. So maybe it's about to just completely melt down. We'll know when we get to about 115. And then after that, if we go to 115, we probably go to 72. And then if we go to 72, then we can start looking and saying, okay, this is probably the bottom, maybe, possibly. And then if we just zoom out here and look at the monthly, again, people are like, oh no, bull runs don't end in just complacency and rounding tops. They end in blow-off tops. Sure. But, I mean, I'm expecting a melt-up any day now. I mean, is this not a blow-off top? Is this not a melt-up? I mean, what the fuck are people talking about? I don't even get it. They're like, no, I'm expecting one more big melt-up. Hello? It just happened. Where have you been for the last 3 years? Hello? Sell by sell on the monthly. This is basically the divergence signal on the Jewel Thief triggering. Now, it's not perfect, and it doesn't always work even when it is perfect. Here it was perfect. And, it took months before we left the bullish control zone. Here we left the bullish control zone, right afterwards. And the sell is a little more, the first sell is just, I mean, not to nitpick, but it's spaced one more or two more spaces to the left than I would like it for a perfect signal. But, all the red histograms don't lie. The 821 getting ready to cross the downside don't lie. I mean, this looks like it's ready to have a complete meltdown. And why would semiconductors have a complete meltdown if everything's gravy and the economy's awesome and we're just going to keep going to the upside? Well, it means somebody was wrong. And it wasn't me. Next, we have the 210 inversion. Obviously, everybody loves the 210 inversion. Blah, blah, blah. Bearish divergence here, hard sell. Getting ready to leave the bullish control zone. This is the market saying, hey, we're topping out here. We're going to roll back over. And then quantitative easing is going to start back up. So one of two things is going to happen. The big players in the bond market are going to be wrong. And bonds are going to roll over. And the yield's going to spike. Or the Federal Reserve is going to be wrong. One of them has to be wrong right now. Federal Reserve's always wrong. So we could assume it's going to be the Federal Reserve. But we do know for sure that as long as the Federal Reserve has their target set for the Fed funds rate at 3.25, that as long as they're continuing to raise rates, we know that the market's probably just going to be wrong. And it was just assuming the same thing's going to happen the last time. So here's the problem is recency bias. So the market is never technically wrong in hindsight, but sometimes the market is wrong short term and it's not efficient. And basically that's what it looks like to me. It looks like the market is saying, oh, this has to be the top because every other time. But we just took out the previous high right here and it's like, well, that was just, don't worry about that little blip right there. Everything's fine. We're just going to go back to everything being normal again. But it's not going to be normal again because this whole entire time we were going down, we didn't have inflation. But the part leading up to this, we have massive inflation while this is spiking. So what does it tell us? Well, based on inflation, probably going to be spiking very soon. So we'll see what happens. Anything could happen, obviously. We don't know what exactly is going to happen, but we got a pretty good idea. And in my opinion, the market's about to be wrong, short term at least. All right, so jumping over in chat real quick, then I'm going to wet my whistle and we'll keep ripping. I'm literally just going to take like 2 seconds and take a drink and then we'll go. I don't want to waste a ton of time. Crypto Gold says, why statistics are great. Addition, Crypto 10 trader. Even if you know it's already, your particular insight often crystallizes things in a new way. Oh yeah, for sure, man. And that's what I go for, with all my like analogies and like weird shit that I just come up with on the spot that only half makes sense, but also like makes perfect sense. That's the goal, is to basically make complex topics simple and also be like fun and entertaining, because sometimes it is boring. So if we throw in some cuss words and we act a fool a little bit, it's at least a little more entertaining, a little more fun, and we get to have a little, good laugh about it the next day or whatever. After the stream's over, the group members come in and they're like, oh my God, I can't believe you said sacrificing chickens. And I'm like, holy shit, I forgot about that. That was hilarious. We all get to have a good laugh. It's entertaining. It's fun. We have a million inside jokes on this channel. So the longer you hang out for, the more of them you get to be a part of. So yeah, I'm going to take a quick drink and then we're going to keep ripping. Let's go straight into crypto. All right, we're halfway through. So yeah, that's perfect. All right, so we're going to jump over and go into crypto. So Bitcoin chart, obviously we have seen once again, a daily close at the lows. So, this is the futures chart. So we don't have that huge wick to the downside. 19,665 is like basically the low. Looks like it wants to go lower. We're literally hanging out at the lows. The longer we spend hanging out at the lows, more likely we are to break through it. That's our support. We're just sitting on support right now. It doesn't look good. We also broke down from our macro 382 from the $3,000 low all the way to the $70,000 high. So we lost that level. We tried to get back above it repeatedly and couldn't do so. So it looks like we're going to go lower. So we've been trading not only with this fib from the 3,800 level, but also with the fib from the 3,000 level. And it's important, in my opinion, to have both of them in play. Because while we do expect, obviously, the green fib in this case is the main fib, the most important fib, we know for sure that there's also going to be bots and algorithms and traders fibbing off that 3,800 or 4,000 level as well. So we want to use both of them and then see, do we see reflex or reaction rallies off them? And we do. So we're going to keep respecting both of them. And they're, not far from each other, but they basically give us a zone. And then it's until they get down into the deeper levels that they really start looking different, getting further away from each other. So again, we have some potential bullish divergence on the TJD TDMACD, but not on the Jewel Thief. So we don't see that confluence we want to see. We obviously see weakness on the daily here. It doesn't look good, very much in a bear market. We see the weekly chart. We have broken down from the 200 exponential and lost the slope. We're very much below the 200 simple. And not only have we closed below it, we have opened and closed below it again. And then we have opened below it. And we're very close, 2 days away from closing below it again. Very much in the bearish control zone. Very much just melting down. Red slope line below the zero line. All red histograms. Looks atrocious. No surprise, obviously. But we know that realistically, if this level doesn't hold, we expect somewhere between 12,600 and 14,000. And we expect it relatively quickly. When we look at this monthly, it actually looks really bullish. Oh, no, wait. The red is bad. Oh, no. Yeah, nix that. It looks like trash. Looks like complete trash. So yeah, this is a bloody waterfall we're getting to see happen in real life. And soon we're going to get to see cascading stops and one of the biggest bloody waterfalls we've ever seen in life. This is literally, not only are we closing or close to closing a very, very nasty red monthly candle. Obviously we left the bullish control zone, hard sell signal, monthly bearish divergence, all red histograms with the exception of these pathetic little greens, and then just meltdown after that, about to cross the 821 to the downside. I mean, just everything looks just absolutely disgusting on the monthly chart right now. And then that being said, as if that wasn't bad enough, that it's just absolutely one of the nastiest looking trash charts we've ever seen. We have this sort of like ascending support that we were really hoping to hold on. We could probably see it better on the spot market chart, but something along those lines where at least we had, some kind of support from here. And now we're even looking like we're losing that on top of it. We're losing key fib levels. We're losing pretty much any hope realistically. I mean, I didn't have hope because I trade to make money. I don't trade with my heart. I don't what's that called? I don't believe in things that don't exist in the markets. You can do that if you want to believe in the Easter Bunny, or Santa Claus. That's fine. If you want to believe in a greater power, that's completely okay. You can do that. You can have faith and you can have hope if you want. But when it comes to trading and making money and making intelligent financial decisions, I think it's probably best to just stick with facts and science. But that's just me though. I mean, we can just hope that God has a plan for crypto, and one day, it just goes to the moon. But I don't like my odds on that one. So regardless, just looks absolutely atrocious. This is going to look disgusting soon. And we talked about how we expected one monthly candle to just completely wipe out the move from 30K to 20K. Well, I don't want to say I told you so, but, well, use your imagination. And we know the next move down is just wiping out the two candles before that. So we have this candle right here. We have this candle right here. And, we know that realistically, the next target it's 13,700 to 14,000 for the complete meltdown. And then when we look at that lining up with some of our key levels, Well, we see 15,000 is the 0.5 macro fib in green. We see 17,000 is the 0.5 macro fib in white, which we already hit on the spot chart. So, excuse me. So no surprise there. And then finally we have like that 12.4, 12.5 roughly level, which is the 618 in white, and then also the 618 in green. So, I mean, this thing could get nasty. We've got a couple levels. I fully expect, slinky theory on the way down though. Of course I say that, and then we have a complete meltdown. So, let's just picture slinky theory, but then the last step, and then it's just a cliff after that. It's the Grand Canyon. So, AKA the old bloody waterfall in full effect. Bitcoin spot chart on the daily. Again, we have that little like anomaly wick down here or candles down here over the weekend. But again, we're just closing the same low, the lowest low that we've closed. So while we're trying to print bullish divergence, this is just basically dead. I mean, it does not look good right now. The hope that we had for a potential scalp on the 4-hour or hour to get some kind of move to the upside died as soon as we couldn't get back above the 8. And we know that because we knew that ahead of time, because that's the first step for us to actually be bullish. We have to get back above the 8. And then once we get above the 8, our target's a 21. And then we get above the 21, we want the 821 cross. And then our target is the next horizontal. And then our target is a 200 exponential and simple. But we don't have to worry about any of that. All this right here, this is all irrelevant. All this. None of it matters. That 76% upside, none of it matters because we couldn't even get above the 8. So if we can't get above the 8, we definitely can't get above the 21. We definitely can't cross 821 to the upside. We definitely can't get back up here to 30,000. We for sure can't get to 36,000. We definitely can't get to the previous all-time high. And we surely can't get to new all-time highs. Why? Not without crossing above the 8, of course. So that's why we just keep it simple. So anybody's like, I'm bullish on Bitcoin. It's going to new all-time highs. Sure, okay, what has to happen before then? Well, until that happens, you're a fucking moron. So anyway, closing the weekly below the 200 exponential, slope to the downside below the simple, opens, close, open, and then, potentially a close and a new low close on the weekly. Now, obviously this has a few days over the weekend. Very much bears in control. We see the bearish control zone, all red histograms for week after week after week. Bearish, divergence. We called the top perfectly. We took a scalp off the bottom based on bullish divergence. We called the Elliott wave of extended flat correction and then bearish divergence off of that. We caused the bullish divergence off of these 2 points right here. We played the bullish divergence. We sold back out, and we couldn't have possibly nailed Bitcoin any better. I mean, it's just absolutely ridiculous. And it's not luck. It's just practice, hard work, and just the fact that Bitcoin trades very technically. So while it's full of a bunch of morons, crypto space that just have no idea about anything, that probably need someone to hold their hand, to use the bathroom. The charts, the market makers, the whales, the people that matter, they're leaving us all the breadcrumbs. All we got to do is follow it. And they're easy. They're easy breadcrumbs. They're super, super technical. And if you want to see what the hell this is and how to do this yourself, just go watch that video, because we literally draw all this live on the video series. Showing you exactly what to do, targets the upside, targets the downside, potential for continuation down, what we expect when we get the move back to the upside, and you too can have an ugly chart that makes no sense to anyone but you. Join the club. But the weekly just looks horrendous. And then when we look at the monthly, disgusting. Disgusting. Now, there is one saving grace. And again, I'm still very bearish on crypto, and it's trash. And it's definitely going closer to 0 than it is to 70K very soon. But that being said, we know that when we got this 821 cross in 2015, that marked the bottom. We know that we got the 821 cross in 2018, that marked the bottom. And, we know we're about to get the 821 cross in 2022. So this next monthly candle could be the bottom. Now, where's that bottom going to be? Is it going to be, at 20K? No, probably not, because we already went lower than that. So obviously. Is it going to be at 14K? Maybe. 14K is a decent support level. It might be there. Is it going to be at 12.5, 10? Is it going to be at, 6? Is it going to be at 4? We don't know yet. So we could be right that this 821 cross marks the bottom, but also, we could be at $5,000 in 1 month. We don't know, but, this candle that we just had, this 1 month candle was 32,000 to 20,000. So what happens if we lose another 12K? we're at 8K. So just one more nasty candle like this, and we're at 8,000. Is it that hard to believe that we could have one more gross candle? Maybe even worse? Is it that hard to believe that, we could bottom at 8,000 for this cycle? I don't think it is. 6,000? I don't think it is. But we'll see. We're not going to call the bottom right now. But if there's one guy that calls bottoms and calls tops, I mean, hey, smoke them if you got them. You know what I'm saying? But we don't do that because it's bad habits. But when we do, we're right a lot. So keep it up, guys. Crushing, crush. So this monthly chart, we really, really just need to let this develop and see what's going to happen here. We don't want to just start picking bottoms right now. We know this thing could get real, real nasty. We know that the cycle analysis, time cycle analysis, 4-year cycles, all that has been playing out beautifully. But we know the momentum's to the downside. We know that this obviously macro top is in, and we know we're going into the opposite environment we've had for crypto's entire life cycle, which is, going from QE to QT. Quantitative titties. No, that's not it. Tightening. Quantitative tightening. But that being said, looks terrible. All red histograms, and we are flipping the slope line red right here, so just not the time to get overly bullish on cryptocurrency. Ethereum looks nasty. Daily, obviously, very nasty. Again, we have like that kind of anomaly over the weekend. It's trying to print momentum. It's trying to act bullish. But you know what? Sometimes the indicators, they're usually very reliable, but sometimes they even fib. And it's not like, let's be real here, okay? I'm not the only one who has super sweet indicators that work phenomenally well. Let's just assume that the smartest people out there, the market makers, the robot AI technology that runs the world or whatever, let's just assume that they're at least as smart and crafty as we are, and that they have these same things. So it's easy for them to print things that look good, and then really they're like, haha, gotcha, bitch. So, that's where like that intuition comes in. But again, we also have to sit here and say, hey, let's pull out our trade journal and say, why are we taking this trade, or why are we not taking this trade? And then in hindsight, we can look back and say, yep, we were right, trusted our intuition instead of, the indicator oscillators. Or we can say, wow, we were wrong, should have trusted the indicator oscillators and, not just said, I got a bad feeling about this. It is what it is. So, but the weekly looks very, very weak. I mean, all red histograms, just complete meltdown. Not to be unexpected. Obviously we expected this meltdown. We nailed this beautifully. We got out of Ethereum. I think it was close to 4,600 or something like that, 4,400. I can't even remember. We were selling back when it was way, way, way too expensive. And keep in mind that our average entry price or initial entry on Ethereum was in the $80 range, and then again in the 160, and then again in the 200 and something. So the difference between selling at 2,500 and 4,000 is who gives a fuck? And then Ethereum on the monthly, retesting the peaks right here, all red histograms, 821 getting ready to cross. This does not give us the same bottoming signal in its last little bear cycle. So, I mean, just nothing looks good on these cryptos. We were setting up for a potential scalp trade off here. Obviously we need to see something out of Bitcoin before we're ready to just jump in these. We had a tiny little scalp to the upside, but we took profits at the 21, as we discussed. Looks like basically our next downside target is going to be the 0.5, which is something like 625. So we nailed 1,000 perfectly. We actually nailed that wick pretty well as also, but realistically about 650. And then we can start looking at it, saying, is this going to be a macro bottom? Or going to go higher? We'll have to wait and see. Bitcoin dominance chart on the weekly. We broke out. We came back tested it. We slightly broke below it. So the real question is, it didn't hold as support. What happens next? Are we going to move back up here, close back above it, and then continue to the upside? That's what I suspect will happen. But who knows? Crypto is so stupid. Maybe just it keeps melting down, and people just keep buying the trashiest trash coins, hoping that their 0.01 penny coin goes to 1 penny, and then they're like 100 air instead of a 10 air, or like 1,000 air instead of 100 air. People are really dumb, and crypto is full of trash moron, quote unquote, investors. So it wouldn't surprise me if, people just keep buying the dip on the trashiest, worst, horrible cryptos as they just go to zero. But eventually they go to zero, and then Bitcoin dominance will shoot up. So regardless, we'll be right. It's just a matter of if we'll be right soon or after everybody gets wiped out completely. you know, not saying that they don't deserve it. I mean, if you play in a thunderstorm, you know, with a, you know, big metal pole, you deserve to get struck by lightning. So I'm not going to feel bad for you afterwards. I mean, I might, you know, take a video of it and post it on the internet for people to laugh at, you know, but I mean, I'm not going to feel bad for you though. It's like if you eat a bleach pot or whatever, I'm not going to feel bad for you. If you like, you know, what was the last one before that? Like viral hacks? They like take the fork and like bend it and, you know, put it in the socket. You know, I'm not going to feel bad for you if you do that because you're a fucking moron. It's better for, you know, everyone. It's better for you and your parents, your family, everyone. If you're that stupid, what happens to you is, well, survival of the fittest, I guess. It's natural selection at its finest. It's modern day natural selection because we don't have as many, you know, dinosaurs to eat you. So, you know, other things have to make up the difference, or else we just end up in this idiocracy that we all exist in today. Crypto total market cap lost to 200x. I mean, it still looks exactly like the Bitcoin chart. It's slightly more bullish than the Bitcoin chart because it's above the 200 simple, barely. But again, you know, how many days before we print a new weekly low on this thing? You know, how many days? I mean, get the sign, guys. You know what it is. Look at this monthly candle. Just absolutely disgusting. Disgusting. Sick. $534 billion. Probably our close target for like a month or two from now. As that was our previous all-time high monthly close. All red histograms. Still technically have a blue slope line, so that's good. As we accelerate as fast as possible to the center of the earth to find some liquid hot magma. 821 getting ready to cross the downside. Just looks nasty. All this looks so nasty. I'm going to speed through the trash coins. Matic had a beautiful move back to the upside, hit the 236. We hit the 236, lost the 236, retested it as resistance. It acted as resistance. Next target. We obviously already hit the 200 exponential and simple, which is what the blue box is. So now we need a green box for our next macro, which is going to give us our 23 cent target. Man, I almost said $23. Now that's a joke if I've ever heard one. Just looks absolutely horrendous. Avalanche melting down, total trash. Couldn't get the 821 cross. Looks like it's going much lower. You know, basically breakdown from our 0.5, retest the 0.5. Looks like we are going to get that move. We front ran the 618 slightly, so it looks like now we're going to get it. The real question is now, since we front ran it though, do we just come straight down here to that $9.50 range? You know, probably just a matter of like by when. So in all reality, we're looking for like 1281 or maybe like 950. I mean, these altcoins look horrendous, horrendous, and this was like everybody's fave. Solana still absolute trash. Slightly front ran that bounce and then underperformed, melting back down. You know, on the race to zero. Again, we know it's going to get down here to like 2350 now. You know, I mean, we don't know anything for sure, but you know, probability says it goes there. But then again, after that, what happens? Does it just go, you know, straight to 1160 after that? Well, probably just steps down. I mean, it looks like trash, obviously. But you know, we have targets potentially down at like $5.50 for this garbage coin. But I mean, realistically, Solana probably goes to zero because it's clearly a failed project on so many fronts. Basic attention token. Continuing to melt down. Again, get a nice bounce off the 618, retest the 0.5, probably headed down to about 19 cents, at which point in time we can start looking, you know, all right, so where are we going from there? But very likely we'll be a teenager very soon. Chainlink continuing to just melt down. I mean, no buyers stepping in here, no love, no potential for a move to the upside on this one. So it looked like we made the right decision to just take the quick scalp and not get greedy and try to get this play. Well, I can't even say it looks like it. Factually, in hindsight, we made the right decision, locking in those gains, which is always what we should do when we're taking counter trend trades. We should always be either, you know, moving our stop up as we go, trailing it close behind us to not give back what we won, or, you know, just taking profits and just saying, hey, if we're wrong, we'll buy back in at a slightly higher price once there's momentum. But again, just melting down, hanging out at the 618. So if this thing lets go, we will see the bloody waterfall in full effect as we hit that 786. which is, basically $3, which is crazy because we got into Chainlink at like, it was like $1.60 or something. That's unbelievable. Oh, you know what? I'd had more. Where did we? What was it on? I think Coinbase has more history because that's when we bought into Chainlink. Was about on $1.60 and then like $2.40, and it's just absolutely nuts. I mean, so we just crushed it on this Chainlink trade, and now it's just completely melted down, completely round tripped. Nuts. I mean, not surprising at all. Algo again, just melting down. Next target, the 786. Now, I mean, these things just look like they are just ready to let go. Again, we see the trend, even if it's not accelerating and it's just continuing to melt down. I mean, it's very clearly these things are just melting down. I mean, melting down. Must be global warming. Oh no. Oh God. XMR, Monero, same thing, just trash. I mean, this is one of the worst macro looking cryptos. It did reclaim the 0.5, hanging on for now. It looks like it wants to come down here to the 618 if it's going to go lower. And regardless, it's all up to what Bitcoin does. If Bitcoin decides to go higher, we'll look for some upside targets. But right now, nothing is pointing up on Bitcoin, so why assume that some random trash coin that literally does nothing for no one ever is going to work? Not this one specifically, but just most of them. ADA, Cardano, so we're back down here at those lows again. This thing looks like it is ready for the meltdown of meltdowns. It has been hanging out at the bottom of our triangle now, getting lesser and less of our bounce. This is basically our bouncy ball, bouncing, 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 and now it's rolling to the end of the table, and it's getting ready to fall out. But the table, there's not just ground underneath it, it's the Grand Canyon. So, where are we going on Cardano? I mean, 23 cents, another 50% haircut. And you're like, no, it can't go down 50%. It's already down 78%. How can it go down another 50? Well, trust me, it can. 85% down already. Next target is 92% down from the all-time highs. And then after that, it's like 99% down. So is Cardano a failed project run by a scamming, trash bag, liar, fraud, piece of garbage? I mean, I'm not sure, but rumor has it. Rumor has it. And so far, I haven't seen anything to disprove the rumor. And we have seen, proof that he is actually a lying scumbag that never delivers on a failed project with massive market cap that can't even figure out smart contracts. But, I mean, again, that's just rumors. I don't know. Trust, don't verify. Or no, verify, don't trust. That's it. KNC, Kyber Network. I mean, this thing's in rough shape. I mean, it's hanging on at that 786 at like $1, but it just doesn't look good. It looks like it's ready to let go of this ascending channel. And if it does, it's going to let go of that 786. We talked about if this could hold long enough, we might be bullish, and it's just not going to happen. I mean, there's no way we would take this scalp trade. It probably is going to sweep the lows. If it breaks down from here, this thing is going to like 6 cents. No, sorry. 68 cents. For once, I made a favorable error. So 6 cents is scary. 68 cents is still scary, but not nearly as scary. It's only 50% down from here. So if we just hodl, we'll be fine. Hodl. Waves. Again, just completely melting down. Was trying to carve out a double bottom. But, I mean, it just literally, is just getting destroyed. Just getting absolutely crushed. Absolutely crushed. I mean, until we can form some sort of, until we can get some kind of initial higher high, this thing just looks like it's ready to just melt down. So, again, target to the bottom, to downside. Just another 60% down or 50% down. That's not bad. 60-ish. $2.10 on waves. And then after that, probably a couple more steps and then eventually zero, probably. I mean, I have no idea what waves is, but if I had to guess, the only thing good about it is probably that its name sounds cool because waves are fun at the beach, in the ocean. Hey. But it's probably trash. I'm just assuming. I have no idea, but. All right, let me jump over in the chat and then we'll keep on ripping and rolling. We're going to do our commodities and I have a couple important charts to show off on the commodity space and then also our member requests as well. All right, so Crypto Yellow Vest, good to see you. Hello, everyone. Late for me. I'm listening a little bit. Hell yeah, glad to have you, brother. DXY is breaking some old support since today's. DXY is breaking some old support. The DXY is very bullish right now. So maybe you mean breaking through resistance? I don't know. The DXY is very, very bullish. Very bullish on like literally every time frame. Even the daily was starting to look a little bearish and looks really bullish again. Todd Schultz, what's up, brother? Good to see you. Crypto Yellow Vest, is better to look Bitcoin dominance for know what happens to the altcoins. Well, yeah, the same way I look at like gold silver ratio or Bitcoin, dominance, or some of the other like, relations of assets to each other. You're just taking out one variable. So if we look at Bitcoin price in dollars, then we look at an altcoin price in dollars, then we have dollars as a variable. If we look at Bitcoin just compared to altcoins, there's no extra variable. So it gives us like basically like a control. And then it also gives us an idea as to whether or not, typically if Bitcoin is gaining dominance, we're not in a bull market for sure. The same way, like if gold is gaining dominance to silver, we're not in a bull market for silver, obviously. I'm sorry, for either one, obviously. As typically gold holds on better when we're going down, but silver goes up faster when we're going up. So speaking of gold, again, looking very bad, very close to confirming into the bear market again. We have talked about how the weekly and monthly chart are looking nasty. The 821 crossed the downside, looks very weak on the weekly chart. And then the monthly, I mean, if ever we saw literally the same thing happening in 2011 to 2013, and just one chance to just protect ourselves from a complete meltdown when everybody's saying gold has to go higher because it's a cult, or no, that's not it, because of money printing and central banks and the dollar's going to zero. I mean, does it look like we're about to just melt down right here? Because that's what it looks like to me. Now, does it have to happen? No. But, I mean, it looks a lot like it's about to just have a complete meltdown. So, and the most important thing, and I'm going to do a gold static chart here in the near future. The most important thing I'm paying attention to is we lose the slope line right here. We get a bullish retest. It fails. We get rejected before even getting back to the slope line. And then we have a complete meltdown. So let's look if we see anything at all similar to that. We break down from the slope line. We come back up. We front run it, get a complete meltdown and break down. And then, if we stay under this slope line long enough, it's going to turn red. And then we're going to have a complete meltdown. I mean, it literally looks exactly like what we did. The only difference is here for a second it flipped red first. And then we got the disgusting rejection. Here it didn't flip red. So it's like, whoa, this time's different. It's bullish because it's not the same. And you're dumb. Okay. Okie dokie. So silver completely melting down at cycle lows, within a couple of pennies. Very close to breaking into the teens, which has been my prediction for some time. It has been able to hang on to its teenage years for some time, but it's becoming very obvious that silver is getting ready to go much, much lower if something does not change quickly. So we lost the 200 exponential, and now here we are basically touching tips on the 200 simple, which is like that $20.50. So maybe if we even retest the lows now, it's a retest of 200 simple. Bears in control, all red histograms. And when we look at the monthly, I mean, look, we're about to get, we actually confirmed the 821 cross already. We're about to get the monthly retest of the 200 simple. And this is the 2016 highs right now. So this was our 2016 highs. So if you bought silver at the highs in 2016, you just wasted 6 years of your investing life. So congratulations. And, when you account for inflation and start looking back at some of these levels and you start taking into account inflation and you're like, silver's a good investment because it's sound money. Well, I mean, unless you invested in silver in 1980, in which case, adjusted for inflation or not, you just lost 40 years of your life. So what could you have done in 40 years investing in anything but silver? I mean, probably become a millionaire. So, is silver a great investment going into the future based on history? Not going to answer that. I'm going to leave that one up to you guys. But let's just say it doesn't look good. Gold, silver, threatening the highs, looking like new highs, ready to just melt up. So gold, silver ratio, how many weeks since new highs? I mean, reset the count, boys. Get the sign. Here's your sign. It looks like pot stocks are going to new lows, ready to melt back down. ACB melting down. Tilray, we want to see new all-time lows on Tilray, and then I'll get excited. Once we take out $2.43, I will be very, very excited for these pot stocks as they go to new all-time lows. Well, really everything else already has. Hexo melting down back at 20 cents again. Likely goes much, much lower. CGC, Canopy Growth. Again, we have a little more history on this one. Completely melting down. Nowhere near the all-time lows. But when we look at this macro picture and we say at this point in time, I mean, the 1.618 is our target at 286, but let's be real, it probably goes to 240. And again, the only reason this one looks better is just because it has more history, but it's looks better for something that's completely round tripping its entire life cycle back to 2014. So again, we're getting close to wiping out the entire existence of the pot stock industry. Sundial, been a while since I pulled this one up. Again, this is one of the ones that I like. We already hit the 786 on that bounce right here. Looks likely we go lower from here, which it looks like it wants to go lower from here, obviously, because all it does is melt down because it's a pot stock. Probably goes to 20 cents. So that's what we're looking for. Again, I do not dislike pot stocks. I'm definitely a macro investor, speculator on pot stocks going into the future, but I'm not dollar cost averaging down into these things because they're just melting down. And honestly, if you would have been dollar cost averaging down into pot stocks this whole time, like a Michael Saylor or a traditional investor that says just buy the dip and then buy the next dip and then buy the next dip, soon you have no money left. Your position is down 96%, and you start to lose hope. We don't have to worry about losing hope because we're just laughing every time it melts down to a new low. We put up the sign and we go, ha ha, motherfucker. Now I get more of your bitch ass once you do turn around. When is that going to be? Maybe never. But if you do, we'll be right there to take advantage of it. And then we can buy a island and we can all fucking hang out on the beach all day, get lit, and just chill on our island because, the pot stock, if they ever do go back into a bull market, it's going to be ridiculous. So we see a lot of the uranium space putting in new cycle lows. URA is holding up a little better, but looks like it's headed back down here. Now, that was our initial target, but you guys know, obviously, you know what? This was an old entry that we were looking for on this move down. So I'm going to delete that because we don't need it anymore, and it's kind of confusing because that was on the way up. Now that we're on the way down, we got the reversion to the mean retest. I fully expect this to come down somewhere around like that $14 range. UEC, again, holding up decent, but getting ready to confirm into the bear market. And again, I expect much lower prices, probably somewhere around $2. UROY putting in new lows, new cycle lows. Again, this thing has been getting beat up worse than anything. We had a nice trade, but we get in, we get off, we get out. You know how that is, ladies. Sorry about your luck. So UROY headed down to $1.82, it looks like, as we're about to lose this support. And then UU, looks like daily, probably going to hit that 407 target soon. And again, still very, very bullish on uranium, but we're basically just confirming into a bear market on the daily. So we can be as bullish as we want on longer time frames, but until we get down to $4 or $3 on this thing, it's not going to look like we're done. This, and again, another perfect example of what we're looking at. Oh, you know what? This is the worst chart to pull up. Let me pull up CCJ or something. I don't even think I have it up here. Doesn't? Nah, I don't think any of these have a longer time frame. Well, if we look at like CCJ or something like that, Cameco, basically we see that it's confirming into like a weekly, monthly, like bull market. So, again, it's similar to like what we're seeing with oil and energy in general is, very bullish long term. But right now, just looks like it has further downside before we get that. But that's great because it's going to be an amazing buying opportunity to reload after taking all our profits. All right, so here is one of the charts I decided to pull up here. This is wheat. Obviously, there's no more food and everybody's going into crisis and the world's going to end. Well, one of two things happens, okay? Either it was over-speculated to the upside and there's no way that it's worth that much, or, we're just having a pullback and all of a sudden everything's going to shift and now actually, like, we're going to have plenty of wheat. So, I mean, we don't really know. We know speculation was definitely a thing as this went absolutely parabolic. but I mean, it looks like it's basically like melting down. So we hit the target, 200 exponential is simple. You know, we have, I thought I had switched to a longer time frame here. All right, so apparently no one can use the monthly chart on wheat because obviously from our peak to our trough right here, all we did was just round trip it back up, and we just double topped right here. And when we look at the monthly, that red line, the you shall not pass line, you know, Gandalf basically says, hey, we're not closing a monthly above that. That's a double top right there, okay? So what happened? Well, we got a hard rejection, double top, and meltdown. We hit our initial target, which is the back test of previous support, 200 exponential or simple on the daily, or the 8 on the monthly. And then we know the next, you know, target would be the 618 or the 21 on the monthly, somewhere around like 832. So we'll see what happens. We will see what happens. But I mean, looks very toppy. Sell by sell, blow off top, you know, melting back down. So, you know, is inflation just gonna be horrible and there's no food going into the future, or is shit about to just, you know, calm back down and go back to normal? We'll have to see. But, you know, speculating obviously, and again on the weekly, it looks very, very toppy here. We have some clear targets at downside. We see confluence on different time frames. Doesn't mean we're not bullish on this long term. Doesn't mean we can't go higher on this long term. But, you know, obviously it has topped out, at least for now. I mean, I don't have to tell you that because we have the chart. So now let's look at lumber. Lumber was a leading indicator for much of the inflation that we saw, like in the housing industry, commodities in general, and ran up to ridiculous levels. We had, and this traded very, very technically. I mean, absolutely beautifully. We came all the way back down to the 618 from the bottom of 2020 to the parabolic uptrend. Came down almost exactly to 618, bounced it, retested the 0.5, came down slightly lower, shook out the weak hands. And what was it? It was the spring to take us all back up from the top right here to the bottom right here to an internal retracement 786. We then double top after hitting the 618, you know, basically get rejected at that descending resistance line, melt back down, lose our support, lose our 200 exponential or simple, come all the way back down. And now here we are back at that 618 once again. So if this holds now, of course we could go higher, and, you know, all of a sudden, you know, they're just not making any more trees, and, you know, we just continue to go parabolic for all of eternity, and this is bullish. Or, you know, this chart is maybe telling us something that nobody else knows or nobody else is planning for, which is that we're going to have a slowdown. Higher prices are, you know, cure for higher prices, and the inflation in commodities is probably going to just bleed out. So is there going to be less wood? Is there going to be, you know, less demand for wood and more wood? I mean, is there going to be less wood and less demand for wood, but the amount of demand is so much less than the amount of, you know, supply is less? I mean, that's what it looks like to me. So we'll see. As long as it's a higher low, it looks okay. But if we lose this level, you know, what's next? 786, 377? I mean, I don't know. We were up here. We got up to, you know, 1,600 but dollars per board foot. Or, yeah. I mean, that's ridiculous. And we melted all the way back down to like, what, 550? So I don't know if we get down as low as 383, 400. You know, I would say that's an overshoot to the downside, because we know historically, you know, fair value on this thing is probably somewhere between, you know, 200 and 400. So back at 400 is not that unrealistic. And then when we zoom out to these longer term time frames and we see what happened, you know, what basically happened was a blow off top, a double top lower high, and then a meltdown, you know, and do we round trip it back to 400? I mean, it seems very, very likely. And is that a bad thing? I really don't think it is. Matter of fact, I think this is a really, really healthy, you know, retest back at these levels. So, I mean, somewhere around, what, 445, I think is probably with a little overshoot back down to 200 exponential or simple, and then we actually just go bullish after this. I mean, that seems pretty likely to me. I mean, we're almost there now. So, you know, I don't know. But we know one thing. We know lumber was basically like a leading indicator telling us, you know, all this ahead of time. So, you know, it was telling us things were going to go parabolic way before they were going parabolic. And then it was telling us, hey, we're probably topping out. And then we're definitely topping out way before everything else was. So, you know, lumber might just be giving us that premonition, that magic 8 wood. We don't want a magic 8 ball anymore. We want a magic 8 2x4. Altria, so obviously, breakdown, retest, meltdown, lost that 42 level. So we know the next two key levels are 38 and 36. I told you we were excited about Altria and its potential. And then I got real skeptical when everybody and their mom was talking about Altria. And look at what happened. Everybody else got excited about Altria, and then it completely melted down. And that's how I knew it was time to get the hell out of the way, because that meltdown was coming. Because I heard way too many, stupid fucks talking about Altria, and I was like, oh, hang on, wait a minute. Oh, are we getting ready to dump on everybody's face? Is that what's about to happen? Obviously it is. And what really happened on the monthly? The macro backtest, as expected, as predicted, as discussed. So this is either the buying, opportunity of the lifetime, basically fair value on the monthly after just going absolutely parabolic, which the last couple times we hit fair value, were the best buying opportunities, or this is macro topping and it's about to get disgusting. And that was our high, and this is our lower high, and that this thing is actually, going to join the rest of these trash bag assets on the race to zero. So, the fact that everybody else was excited about this all of a sudden, I'm like, yeah, it probably does just go to zero. Which is why we take our time with these entries. And also when we hear other people talking about stuff, we just assume that the opposite will happen because they're all stupid. So that being said, until we can now clear above this high right here, we expect we're going to come down here and threaten the low. And if we break down from that 35 low, this looks real nasty, because then we have to start looking at this, as basically a macro top. And just going back to the 2008 high, we have to say, okay, we're going to retrace this 2008 high now. We already touched a 0.5. So if we put in a lower high now, likely come down to a new low. So if this is right, which makes sense because everybody now is trapped in this because those morons bought it at the wrong time and then it melted down, which that actually tells us probably this thing goes to like 27 bucks. And then when they finally give up and they capitulate, then, we'll be there to take the baggage. And we're like, we'll take those. Bye, Felicia. And that's like 2008 levels. So we'll see what happens. We'll see what happens. Maybe it's already bottoming and we'll get an opportunity to buy it where it's at now. We got to wait for something because right now it does not look good. So once everybody's like, Altria is dead, it's going to zero, then we'll probably look to get in it. Kraft Heinz, reclaiming that key level. I mean, this thing is really trying to not lose this level and melt down from here. I mean, it could go either way, honestly. It's still making up its mind. So there's either a really nice trade setup or it's about to just, hit that stop real quick and then realistically probably come straight down to like 32.62. Cabot, CBT, retesting 200 exponential and simple on the daily. Doesn't look great. Underperform on the move up. It hit the 382 though, and it's holding the 236. So if this area holds, we likely do get the pushback up to like 68 or 70. But realistically, it probably does want to go lower. Based on the reaction we've got so far, doesn't look particularly great. This one, if we zoom out and go to our monthly chart, just because we are getting close to the end of the month, obviously there's still some potential. It still looks bullish. The 200 exponential is back on top of the 200 simple. We're still putting in highs. Green histograms looks okay. Stochs look like they're trying to cross back up. So we're either going to print bearish divergence rejection on the monthly here, and this thing just melts down, which we're not seeing on the histograms of the TDMACD. So we're seeing a lack of confluence, which is good if you're bullish on this. We don't want to see bearish divergence on both indicators. But if it does decide it wants to come back down here, realistically, we could be looking at like a 44, which like the 382 would be beautiful. 46, 47, which would probably look like a nice buying opportunity. This thing just put in new highs. So if it holds this level, it's good and probably does see continuation. So we don't want to get too bearish on this. But it does look like it's getting ready for at least a short to mid-term pullback, which again, we're seeing a lot of really good setups for buying opportunities. Now, most other people, though, already blew their load. They don't have any more dry powder because they already used all the buying opportunities, which actually we're literally just selling opportunities for smart people. But when you're buying the dip in a bear trend and everybody else is selling the rip, you're constantly just going further and further underwater. You're the Michael Saylor, the rat, and the giant hand of the market is just holding you underwater, laughing at your demise because you're a moron. And, SEC will come looking for you very soon. I'm sure they're already building their case, just like in 2000, Michael. And I'm sure very, very soon you'll be paying a large bribe to the government for being a scumbag piece of shit. again. Again. It's going to be a lot bigger this time because you're talking billions instead of millions. So have fun. And also, feels good to be right again about Michael the Failure. So HUSA, Houston Energy Corporation, again, we talked about this, still looks very bullish longer term time frames, but likely does see a pullback somewhere in the mid threes, somewhere around probably about 338. ENI, so we lost the 200 exponential and simple, retesting the 236, looks like at least a short-term rejection, maybe a little gap fill right there. Looking for a counter trend scalp, probably somewhere around $10.33 for that pushback up and eventually reversion to the mean. Only just getting started, it looks like, correcting a larger macro pattern. All these are developing basically just how we talked about. So we have our monthly bearish divergence on Newmont Corporation. It has led us back down to that key support. We have lost the 200 exponential or simple. If this area holds, we have a potential scalp for about 25% retest at the top of the range. If this area breaks, we're looking for a retest on the weekly 200 simple and exponential at about $45. That is NEM. Vail is next. So we basically came down to that key support level. It's holding for now. This one looks okay. It's below the 200 exponential and simple, which isn't great. If we hold this level, which is a very, very strong ascending support, it doesn't look terrible. What I don't like is that we just put in a lower high here. So if we lose this level, it's going to look very, very toppy. And we're going to look for an opportunity to pick this up at about 879 potentially. If we can hold this long enough, there's not a ton of meat on the bone, but we're basically looking for new highs. Which is, if we get new highs, it's not bad. If we get an internal retrace, there's not a lot of meat on the bone. Mosaic Company, MOS, retesting the 200 exponential is simple. If we can get a close back above $50.50, there's a scalp back to the upside for an internal retracement. So we have a bearish move down. We have a potential bottom. We have tagged the 236, so we can confirm that we are allowed to validate Fibonacci's from here on out. So the rest of the market is seeing the same thing we do. We had a sell-off. The sell-off is temporarily done. We came back up. We got rejected. We would expect to hold support at this macro fib in yellow and then eventually get a push back up to 55.88, possibly 59.88, or maybe 63.92. We'll just call it 63.88 to stick with our little trend there. So definitely some potential for this one. Looks a little bit better than some of the other ones do. I wouldn't get too greedy on this though and go for higher than the 0.5 or 618, as that looks like that's probably going to be the most reliable target and most likely, as we are still bouncing the 200 exponential. So we would assume that this is going to act as support. So 20, let's say 5% scalp roughly to 29% scalp, something around that, with a tight little stop of roughly 8.5%. Realistically, we should just go for a new low scalp and do a 10%. But realistically, that's really what the trade is and should be. Because the real question is, okay, this is our question. This is our dilemma. Okay, do we just jump the gun and take the entry right now off of the macro yellow fib right here at 48 bucks, right where we're at now? And we say if we put in a new low, we'll get stopped out with a 5% tight little stop loss, like a toy guy. It takes us out of the trade, that's fine. We'll look for an entry lower or buy into like some strength. Or we wait for the more realistic, reasonable confirmation trade, a close back above 50.52, and then we have a slightly less favorable entry, a slightly less favorable risk-reward ratio, but much more likelihood of success or probability of success. So it's 33% with a 5% stop if we just jump in right now, which is 6 to 1, or it's a 27% with a 9 and let's say 10% stop loss, which is 2.7 to 1 risk reward ratio. So the real question is, do you just want to take a shot in the dark, or do you want to wait for confirmation and momentum? Now, because the rest of the markets just look absolutely atrocious, for me, I'd rather wait for the confluence. But I wouldn't blame someone for taking a shot in the dark on something like this, as long as they're rationalizing it how we just did. And I'm not trying to build a rationalization for Mosaic by any means. I'm just saying if I was going to rationalize that, I would not be at fault. I would put that in my trade journal, why I'm rationalizing it, why I'm taking a less than probable, success trade, because the risk reward ratio is substantially higher, and then I can just re-enter if I'm wrong. And either one of those trade setups is perfectly fine. The real question is, do you want to be more aggressive? Do you want to be more conservative? And right now, while the markets look the way they do, I'm more conservative. I'm inherently more conservative, but with the markets looking the way they do, I'm exponentially more conservative. So that being said, remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. If you do any of the things that we talk about in this stream, you will, without a doubt, lose all of your money, and you will end up living in a van down by the river. Which, for a lot of millennials and, Gen Zers, probably doesn't sound bad right now, but it's not supposed to be a good thing, okay? It's not a good van down by the river, all right? And if you don't know what I'm talking about, just look up Chris Farley, Matt Foley, Saturday Night Live, because it's the funniest shit ever. I love Chris Farley. R.I.P., my dude. DRV, Direxion Daily Real Estate, Bear, 3X shares. So we've been talking about this one. A couple of the group members took a play on this. This was one of the group members had brought this to our attention. This thing is supposed to just go to zero, but we have talked about a potential setup with a 117% upside, 10% stop loss. Already went in favor of you guys on that retest and potential entry of the 200 exponential. So congratulations on that. Should be up, roughly about 10% now. So the real question is, do you stick it out with your stop loss where it is now and just go for, the 10% down that you lose your profits and then 10% down that you get stopped out? Or do you just move your stop loss up now to your entry price? And then if we come back and revisit your entry price, the trade probably fails and you're back out at break even. But you still have a shot if it goes to the upside. And again, that's up to you. Me personally, I typically prefer to move my stop loss to break even. That way I can never turn a winner into a loser. Worst case scenario, I turn a winner into a break even. But regardless, if you are already in this trade and you just move your stop loss up to break even now, it's a free trade. So no matter what happens, who gives a shit? Because it's not even your money. You don't have anything to lose. You're literally using the market's money as a stop loss, and you're taking your money back out of the market, basically, if it fails. But you're not decreasing your position size, which is the best of all worlds, in my opinion. But also, you live in a van. Palantir on the daily, as long as it's holding this ascending support, it still looks okay. It doesn't look particularly great in general, since it's at like all-time lows. But as long as it's holding 885, the fib, and then also this ascending support, looks okay. It's building up momentum. There is trade setup in play, obviously, with an entry of, basically this fib, $9, 890 something. With the target back, reversion of the mean, retest of the macro yellow fib, and also 200 exponential and simple for reversion of the mean after a complete meltdown. 51% upside, 7% stop loss for a 7-to-1 risk reward ratio. Obviously, what was it back here? Palantir was buying gold, so everybody got all hyped up about Palantir. I'm like, really? It seems like a really good time to buy into Palantir because everything's going great. Or not. Or it's just at all-time lows, and it's just retesting resistance before it goes much, much lower. If it don't make money, it don't make sense. If you can't put it in your pipe and smoke it. Sam, Boston Beer Company, again, complete meltdown at the 618, holding on for now. Very strong support here for now. If we lose this level, 786 at about 209. This should be green or blue. Don't you dare be red. Don't make me tell you again. So we'll see what happens. It doesn't look great. Let's be real. When we zoom out to the monthly here, it looks like a death. We're bouncing in 200 exponential or simple. I don't know if you guys have noticed all the monthly charts that we've looked at in the last, all today and basically ever. Not many things ever come down to the 200 exponential or simple. So obviously this is atrocious, absolutely horrendous. It is retesting 2015 levels. So it has literally given back everything. So pretty much the only way this chart could look worse is if it didn't put in a new all-time high in 2021. But it did. So it's not as bad as a lot of stuff. It's no Intel, but it still doesn't look good. So next target's a downside 786 at 207. This thing is flatlined though. The stochastics are literally, we're at 2.5 out of 100. It can't go lower. You can't go lower, bro. Doesn't look good. Does not look good at all. But it's at a very, very key support. This is a very strong support. This is a very strong support. I would expect a dead cat bounce on this. And I mean a dead cat bounce to like 414. But that may not even happen because this is really trash. But it is about to close this monthly in a day. If it closes monthly at the 618 exactly, I think it's going to get some kind of bullish move back to the upside. But again, this thing is just absolutely disgusting. One of the worst charts ever that's not that actually put in a new all-time high, which is good. So is there a trade set up here? I think we already tried this one. And I try to spend a little extra time on the member request ones because I know you guys obviously care whether you're in a position or looking to enter a position. So, you know, you have to run a super tight stop. If we take out the loss, you just cut, and run. But it's like a 4-to-1 risk reward ratio. 33% upside to 415. Stop loss below 286 for a new cycle low. Entry where we're at right now, 314 on this monthly close. Talking about 33% upside, 8% stop, 4-to-1 risk reward ratio. Below 50% probability of success. But with 4-to-1 risk reward ratio, could you take a stab at it and just not even give a damn? You could, because if you took that trade 100 times, you would win more than you would lose. Only because the risk reward ratio is 4-to-1 and the probability of success is probably around 33%. If the risk reward ratio was 3-to-1 or lower, it's not worth taking. Budweiser, broke down below 382, retesting it now. Likely goes lower. As long as it's holding a higher low, it still looks okay. But again, we zoom out to long-term chart, and I mean, this is just absolutely disgusting. I mean, this is round-tripped its entire life. You know, it was at this price in 2009. It went down lower than that in the Rona dump, and it has just continued to put in lower highs and lower lows. So what is likely after this lower low right here? What's the most likely thing to happen? I mean, Budweiser goes to zero, right? Maybe not all the way to zero, but, you know, it continues its race to the bottom, which it's currently doing extremely good at. It's very, very strong at losing all of your money. Very, very good at that. There's not a lot of things that are better than this. Arguably, you know, Cathie Wood and Budweiser are equally good ways to lose all your money. Does it hold here, though? No, it has to do something first. It has to do something. And there's no signs of a bottom. I got to see at least some kind of like mid to long-term bullish divergence and a massive capitulation wick and just a complete shakeout. And then, you know, probably M&A coming up. M&A, we're going to start hearing about mergers and acquisitions like crazy in many, many of these spaces, including crypto. We're already kind of hearing little talks here and a couple things here and there, but I expect ridiculous amounts of M&A as liquidity basically is pulled from the markets. All of a sudden, it's impossible to, you know, get decent financing, and these companies have no choice but to throw in the towel or basically, you know, just concede to, you know, just more consolidation, which is obviously good. Obviously, consolidation is good. Unless you're one of those people that's like, I hate big tech, it's mean, and there's too much consolidation in the oil markets, and capitalism's not fair for all the slaves. Oh, wish I wasn't a slave. Oh. IGO Limited. So we got that head and shoulders. This looks nasty. It looks ready to let go here. I mean, it doesn't look as nasty as a lot of other things when you just look at it like this. But the way the technicals are shaping up, it looks like it's better. Looks like it's ready to go to like 850, and then probably gets that retest, reversion to the mean, back to about $11. Bullish divergence. I mean, I shouldn't say it looks nasty. It's not as bad as a lot of the other stuff. Realistically, it's bullish long term, but it just looks like it's ready to let go. 770 on the weekly. Bearish divergence. Oh, wait. No? Do we? No, not bearish divergence. My apologies. All red histograms melting down. I mean, let's be real. These commodities are tired, and they need to cool down for a little bit. They need to refuel before they can go much higher. Whether it's mining, whether it's mineral commodities, metals, whatever. It looks like we got some downside coming. 870 from here, so another dollar down. I mean, but it could get nasty and still look very, very bullish. I mean, this monthly chart looks very bullish long term. You know, it's confirming 200 exponential above the 200 simple. 8 and 21 going parabolic, just put in new highs. This is a very, very bullish chart on the monthly, but also short to medium term, it's bearish for sure. Very bearish, short to medium term. So we just got to let this play out and then start looking for, you know, an initial dead cat bounce around here, a pushback up to the 236, and then lower, you know, meltdown. And then realistically, I mean, this is like a scalp play right here if we're looking for one. But what we're really looking at is an actual legitimate entry, probably somewhere around here. Because what this ends up probably, you know, hypothetically, theoretically looking something like is basically a push down here. Realistically, if we're correcting the whole, there's two ways this can play out. We do, and either way, it's going to look the same right off the bat probably. We're either correcting, you know, the 3, and then we're about to have a 5th leg up, or, you know, we're correcting this whole entire thing back to 2008. And maybe this is like a 1, that's a 2, and then this is a 3. And then, you know, I mean, there's a lot of ways this could be. And it's kind of sloppy, so we don't know. But realistically, either way, it looks like it comes down to $8 first and then shoots back up, you know, to like 11. And then if it keeps going, it's probably going to new all-time highs. If it fails and rolls back over, then we get the entry at the 382. So the best thing we could do now, honestly, is be patient on a couple of these that are just lagging behind everything else, but starting to confirm bearish. You know, the top performers should become hated before they're great opportunities once again. SQM, Sociedad Química Miners. It's like the same chart, honestly. Nothing really looks different on this. We've talked about it quite a few times, but it basically is doing like the exact same thing. So again, we just got to give it a little bit of time. Galaxy melting down. I mean, again, let's just switch out to the monthly since we're about to print it. I mean, this is just disgusting. Look at that meltdown, 821 cross down, all momentum to the downside, bloody waterfall on the monthly in full effect at the 0.5. So do we find temporary support here? We probably do. But realistically, I mean, the way it looks now, sure, we probably find some kind of support. Maybe there's a scalp back up to the 382, which would be a decent move back to the upside, but I mean, it's tough with how nasty this looks. 66% back up, you know, and then from there, where does it go? You know, probably down another 65%. I mean, so realistically, again, it's just looking like basically, hey, we double topped. So the real question is this an A, a B, and a C? Are we going to get a 1, 2, 3, a 4, and then a 5? I mean, we don't really know right now, but let's just assume we'll just skip that first initial push up and just assume we get something, some kind of bounce, something like that. Now, realistically, we could bounce back up here and then it could run. But I would just really be looking for like, I mean, it looks like it could go to $3 just as easily as it could go to 12. So that's a tough one. You know, when these things are full on melting down, we don't really want to just jump right in and start calling bottoms just because we're at key support. But monthly close at support, you probably do at least get some kind of push at the beginning of the following month. Quarterly or semi-annual close as well, same thing. MBS, Monkey League. So we talked about the potential scalp up to the 618. If this is going to continue, want to keep a super tight stop if it breaks down below 786. I obviously am not buying anything or trading anything called Monkey League. But there is an argument to be made for a scalp for this. You know, if you're a degenerate gambler. And I don't mean that in a bad way. I just mean in general. EBR, Contrast, Centrus, Electricus, Brasiliurus. So don't worry about me butchering that. All right, let's go out to the monthly on this bad boy and take a look at what we got going on. So, all right, so we have a low, then a high, then we have a lower low, and potential of a lower high again. On the monthly, we have reclaim the 200 exponential and simple. We're technically on top of those, and they're flat basically. So could see easily continuation to the upside from here. Let's see how technical this thing was trading from its low right here to its previous all-time high. So we have 2010. So we have our low from 2003 to 2010. And then we see we don't have a super technical like fib extension. Oh, actually, you know what? I might just have a couple extra ones turned off. Let me mess with this. 1.236, 1.5. Where's my 1.382? There it is. Don't mind how nasty and disgusting that is, because I just have random numbers punched in random places. Okay, so trading very technically. Nailed the 1.382 perfectly, and then got its bounce back up, so that is good. We know that it's respecting technicals very, very clearly. That is always a good sign. Let us change this one over. We're going to make that one green. We're going to do one once again from the high to the 1.382, which was our fib extension target. And then we're going to look at how technically it is trading now. And if it is respecting these fibs, once again, respecting them beautifully. 618 top, back down to the 382, back to the 618, overshoots the 382, back on top of the 618, support at the 618, breaks all the way back down to the 382 again, resistance at 618, support at the 0.5, resistance, support, breaks back above the 618. So if it does go back to the upside, we expect it to go to the 786. So the 786 would give us roughly a target of about $12. And it looks like that is where it wants to go next, assuming it holds this area. We do not want to see it break down from here. It has essentially, it's building a decent bullish structure. So it is building a decent bullish structure. It has some ascending support. It does have this little washout right here, which would have been scary with a wick, but didn't close the monthly below that. So it is technically still postured up nicely. Obviously, we see if we did something like this, we have a little different of a picture, but still is technically, it's still technically bullish. We have a support, ascending support here. We break down from that support and then it's acting as resistance. It's acting as resistance. So again, could it act as resistance right around, the area we're looking for, about that 1280? It seems likely. Now, from where we're at right now, is there a favorable trade setup, an entry for this? I doubt it. We can look at it by the numbers, but you're realistically, assuming that you have not bought into this yet, we really have to say if it breaks down from this on a monthly, we don't want to be it anymore. And our target is somewhere in between the macro 236 and the internal orange 786. That gives us 38% upside, 26% downside, 1.4 risk reward ratio. So there's just nothing there for us right now. So your alternative is to just run a just ridiculously tight stop if we break below the 618, or just wait for a favorable setup, or just straight up buy into momentum. So if we move the stop up to the 618, and we say if we break down below that support, which is very strong support, and it is very technical, if we close a monthly below the 618 at 746, we're out like trout, okay? Something smells fishy. You know what I'm saying? If not, if it holds and we start to push up here, that gives us 38% upside, 17% downside, still a 2.2 to 1 risk reward ratio. It's just nasty. There's just no real trade setup here. Not responsibly. You could for sure degenerate into the momentum to the upside and not be mad about it. But short term, we see some bearish divergence on the daily right here. So, this is just, we got to be real careful of that. We do not want to get caught when this thing dumps. We're looking for probably this to pull back and get an entry because, again, we see a high here and then a higher high here. And then if we look at the price action, or I'm sorry, the indicator oscillators rather, compared to the price action, we see a high here. And then, oh wait. Yeah, okay. A high here and then a lower high here. A high here and then a higher high here. And then same with our stochastics as well. A high here and a lower high here. So yeah, we see some pretty clear bearish divergence and confluence from both indicator oscillators on the daily. Now, could we easily, my favorite divergence is 3 drives. So if we get a push up here for that 3rd drive and get one more drive of bearish divergence here, and then we break down from that, that's when this starts getting juicy. Breaks up from here, comes back down, breaks down from this levels, and then we could take an entry from a much more desirable point, which, I mean, ideally, we would get it down in here at like the 7 to 740 if you're looking for a scalp on this. So, but I would watch for a 3rd drive of bullish divergence. I'm sorry, 3rd drive of bearish divergence, and then look for an entry after that plays out. All right, let's check our time here. I'll jump in the chat for a second, and then we'll see about running through tech real quick. 2:36. Not much going on in chat. Appreciate everybody that's here. Make sure you smash up the like button, share it with your friends, make your dog watch along with you. I'm assuming that nobody here is a cat person because we're all men. That's just a joke. If you are a cat person, please don't get offended. And also, that doesn't apply to like cats over 40 pounds. So if you have like, a domesticated or non-domesticated, predatory, legitimate cat, I have mad respect for you. Actually, more respect. And if your cat weighs over 100 pounds, I mean, I'm not even mad. That's amazing. I want a picture because you're a lion tamer. So yellow vest, dominance. Are you looking tether chart sometimes? I'm looking every once in a while for tether to go to 0, but it still hasn't happened yet. When tether go up, Bitcoin go down. When tether goes up, Bitcoin goes down. Well, tether is a stable coin, so it shouldn't go up. Tether should basically just stay stable. So do you mean market cap? Are you talking about the market cap of tether? Because that is different. I do look at the market cap of tether and constantly see the direct relationship between every time they print tether and Bitcoin's price goes up. But also that's how pyramid schemes work. So it's really not surprising. But I'm also not being sarcastic. I'm being serious right now. Even though I sound exactly the same when I'm serious and sarcastic. But no, I don't really watch tether chart. I mean, we could check it out sometime. If there's something interesting going on, feel free to let me know. And I would be glad to have a look. But I assume it probably just looks how it always looks. So that's what we didn't look at the DXY. That's my fault if I said we didn't look at the DXY earlier when you were asking about it. So yeah, DXY still looks very bullish. So the same way the TNX started melting down off of that bearish divergence we saw right here, DXY is now threatening the highs again. So it had all the chance in the world to break down from here, and it's not. Now, it could still. We don't want to just say, oh, it didn't break down, so now it's not going to. But we're basically, pennies off of the cycle high. And then when we go out to the weekly, we're getting ready to basically close. We're, 2 days away from closing a new weekly cycle high. And when I say like cycle high, I mean, we're talking about we have not closed a weekly at this level since back in 2003. So as long as we're closing highs that we haven't closed since 2003, I would say this is still very, very, very bullish. Now, we did just wick up here and get rejected, but I mean, we got 2 days now. So if we close above that previous high at 104, which was the monthly or weekly close, it still is just continuing to print higher highs on weekly. So it's like, oh, look, the same way we're bearish, 0 weeks without incident or new lows, we're bullish as well. 0 weeks without new highs. So it's very, very bullish. The same way 0 weeks without new lows is very, very bearish. And what looks like potential bearish divergence on the weekly can easily be invalidated because all we have to, it's not even bearish divergence because we have a lower, so no, we have a higher high. So if this just sees continuation and we just get a couple more histograms up here, we're already higher on price action. It just invalidates any potential bearish divergence. And then it just looks like we're just trending higher and we were just cooling off. So again, still very bullish. We did leave the bullish control zone, which is, potentially bearish or showing some weakness. But realistically, we're probably just consolidating a little bit while it floats up. I mean, this looks like a bullish reset potentially again on a longer time frame. The indicator oscillators are trending down while price action continues to go higher. So while it's unsustainable, I mean, if it resets, it can just keep going higher because it's just loading back up with fuel. And when we look at the monthly, we have 20 hours before we close a new monthly high, since 2002. So the dollar has not been this strong ever in the last 20 years. So anybody calling for the dollar DXY to melt down or the dollar to fail as world reserve currency is honestly just a stupid retard moron fuckboy. Now, eventually, does that happen? Sure. Maybe it happens in 2030. Maybe it happens in 2050. Maybe it happens in 2025. Sure. I definitely think eventually things change. But there's absolutely nothing on this chart right now that says suddenly the United States dollar is going to weaken compared to other currencies around the world, especially the ones in this basket. So that being said, anyone saying the dollar is weak, it's getting ready to roll over, it's about to go down, I don't see any indications of the dollar rolling over. Matter of fact, you would have to be an absolute moron to look at this chart. This is not directed at whoever asked this question, by the way. This is directed at all the stupid idiot morons like Puke Groman, or wait, no, that's not right. No, I can't even say that because that's actually like a racist word. You can't swap the L in Luke for a G. Yeah, okay, so we'll have to leave that one out, but you can probably figure it out. And if you're not sure, just make sure that you don't get lost in the forest for the trees because the DXY, all green histograms above the 0 line, blue slope line on a monthly, beautiful. Stochastics, left the bullish control zone, hard buy in the bullish control zone, powerfully trending to the upside, very, very bullish. Knife stab to the upside, not great. It's really high, but also it can just come up here, stab up again in the next couple months, put in some bullish divergence while it goes absolutely parabolic, hit our target to the upside, and then cool down for a little while because it's just now starting. It was a 40-year downtrend, a bear market, and now we've been in a bull market, and we're above the 200 exponential, we're above the 200 simple. They're both sloped to the upside. This is literally the most bullish the dollar has ever been since the last time it peaked out and rolled over back in the 1980s. So, if this chart went back another, 50 years or something like that, we would see basically that when this happens, it's the beginning of a macro bull trend, and the dollar DXY at least is about to go parabolic. So I don't see anything in this chart that's like, hey, all of a sudden, this is going to be the last time we put in a new higher high, and then we just roll over, and that's it. Sorry, dollar, your time's done. Matter of fact, I see the opposite. The whole world's about to be fucked because the dollar's about to go parabolic, and it's going to completely melt down the world, market. So, not good. Not good. Great for America, kind of, but horrible for everybody else, especially if you have debt denominated in dollars and you don't make money in dollars. Very, very bad. Short squeeze in the dollar. So all of the, idiots that were FOMOing into bankrupt trash stocks for a short squeeze, maybe FOMO into the strongest currency, on earth, the world reserve currency, while all the other currencies completely melt down and the world goes into chaos. Maybe do that. Or also just buy bankrupt companies because that makes sense too. Because that's essentially what you're doing, buying the, U.S. dollar. Because, all countries are pretty much, bankrupt, running massive trade deficits in the trillions. Same thing. Short squeeze can go much, much higher before it goes lower. Revlon, bankrupt, up 600%. Short squeeze. Got him. Tesla. All right. So we're out of the Tesla trade, obviously. So we got stopped out. We moved our stop loss up. The area did not hold above the 821. So it takes us out of our trade. It is what it is. We basically end up either slightly up or depending where you moved your stop loss to. If you moved it up like me, 710, you got taken out in slight profit. If you still have it at the entry price, you're probably still in this trade, but it doesn't look particularly great at the moment. Who knows? It might just shoot up here, but definitely looks like an underperformer, unfortunately. I was hoping Tesla had been strong for so long. I really thought we would get more of a bullish bounce, but it is what it is. When they start waving the flag, we get off the boat because it's about to sink. And it looks like it's sinking right now. couple days away from a bearish engulfing candle. Close at or below 650, and we likely hit our target to the downside. And then we just reload the position and try again at the 200 exponential. Very, very strong support. 236 macro in white, 537, and then we have an even better trade. So we'll just take that one when it comes. And then the monthly, Tesla looks better than most, but it did close down below, closed at the 21, and now open at the 21. If it closes below the 21 on the monthly, again, that's our first open and close below. And then usually we see, you know, pretty nasty dip, which is 500 is the initial target, and then 387. All red histograms, but one green one. Not a very reliable, you know, sell signal series here. We had a sell, then we had a buy, then a sell right afterwards. So basically just a throw over. Failed breakout, whatever you want to call it. ARKK, obviously a very good investment as long as you bought, you know, prior to 2017. So if you bought into ARK way before anybody had ever heard of it, you probably did break even. If you bought in way before anybody heard of it, you were probably still up by about 100%. Remember how good everybody's talking about how great ARK is and how good it is? Well, at this point in time, it's up. Okay, if you bought this on the day it came out and you and Kathy were besties, and she was like, invest in my new fund, it's going to be great, and we're going to do great. And I mean, oh, sorry, wait, my Kathy voice, I don't really have one, but what does she always say? Well, we believe that based on our research from a bunch of like high school and college kids that have no real life experience, that there's going to be yield curves feeding yield curves, feeding yield curves, feeding yield curves, and that our investments will go parabolic, and we expect 50% annualized rate of return over the next 5 years, and we have a 5-year time horizon, but we day trade. So if you bought into Kathy's bullshit and you were the first person to ever get tricked, you know, by this trash bag human being, and you literally bought, let's see, in the last 2,797 days, so 2,800 days, not bad. In that 2,800 days, you doubled your money. You're up 103%. Congratulations on your good investment. I wonder how other things did in the last 2,800 days. I wonder if anything else did better than 100% in 2,800 days. And Kathy Wood is an excellent investor. And if you figure out how much money Kathy lost in this time from everybody that bought above where we're at now, in the 20s of billions of dollars that she has lost, compared to the, you know, tens of millions maybe of money that she made people on the way up, I would say that, you know, if you figured out all the beautiful decisions Kathy Wood has made in her life and all the billions of dollars she has either made or lost from people, I would say she probably made people around 1 billion, and she probably lost people somewhere around, you know, 20 or more billion. So I would say net negative, Kathy Wood has lost $19 billion. So congratulations, Kathy. My wild guess and facts on the chart tell me that you are a fucking moron. And that's why Jerome Powell put a hit out on you, because he invested. He invested in innovation. EDU, again, just hanging out between those moving averages. As long as we're above 1668, I'm staying in the trade. I still expect 2630 as a target to the upside. China, got to be careful. People are talking about China's back in a bull run. It's the place to be. It's up 300% off the lows. Well, it's down 90%, and then it went from 100 to 10, and then it went from 10 to 30. So it's in a bull market. Or China looks fucking terrible still, which is my view. NEO had a nice little move back up, reversion of the mean, meltdown. Again, let's just look at this and just use it as an example of how great China looks right now. Well, we melted down. We got the 821 cross the downside. We basically just completely bled to death. We saw a slight bounce, a retest of the 8 and 21 until we're back above the 8. We cannot even begin to assume that we're going to go up to the 21. And if we can't get above the 21, we definitely can't cross the 8 and 21 back to the upside. And if we can't cross them back to the upside and get above the 21, we definitely can't go to the previous high, the high before that, or the all-time high. So I don't see anything bullish on this chart right now. I see a dead cat bounce after a complete meltdown. So let's just say from the high right here to our low, NEO melted down 82%. Congratulations. You just lost 82% of your money. So your $100 is worth $18. Congratulations. And then we had a bounce back to the upside, 106%. And you're like, well, that's great. That doubled in value. So you're back to break even. Unfortunately, that's not how it works. So if we go from the high right here, and then we look at where we're at right now, instead of down 82%, you're down 66%. So congratulations. You're a horrible loser. You have lost 66% of your money, but you didn't lose 82% of your money like you did a month ago before the move back up. So that's bullish according to Wall Street. So China, 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 all in. Or we just use our brains and it's just in the process of melting down and it just hasn't completely melted down yet. Nvidia, new lows, new cycle lows, closing at the lows, a couple days away from our monthly close, a couple dollars away from our target, complete meltdown. And honestly, you know, at this point, we're almost at the 786. If we go slightly below that and we hit the 886, you know, it's hard not to just zoom out and look at the macro and say, look, you know, we already retested the 236, that failed. So we're looking to buy the 382. We expect some kind of bounce back to the upside. But in all reality, realistically, could Nvidia have just a nasty short squeeze that just is absolute, you know, beautiful scalp? Yes. On the weekly, or on the daily, could easily have a 43% move to the upside. And when and if Nvidia gets there, that's exactly what we'll be looking at. Something along the lines of this, like 43% upside with like 7 or 8% stop loss, 6-to-1 risk reward ratio on something that I would not mind owning into the future if it starts looking bullish. But realistically, get in, get off, get out. That's what we're looking for. So bullish divergence. Love to see one more drive of bullish divergence at 382. Close a nasty monthly candle and then just get a dead cat bounce retest. Scalp a quick 40%. Get our nut and then just dump it again. Dump it. Apple, again, same thing. You know, breaking down. Looks like it wants to get that reversion to the mean. Got to be real careful on these because they've been holding up nicely for a while. It's back at the 236 below the highs from 2020. So again, gave back everything. Full round tripped it. We don't want to round trip it back to the lows though, which is our next target to downside, which is 113-ish. So at this point in time, it looks like it wants to go to like 113. As long as it's above the 236, it looks okay, at least. It doesn't look terrible. When we go to the weekly, though, you know, at this point in time, we know what happens here. Eventually, we hit the 200 exponential or 200 simple. So Apple, again, 113, that exact same target on the weekly, or 101 on the 200 simple on the weekly. And then, you know, on the monthly, this thing, again, holding up better than most. But, you know, at this point in time, we're getting dangerously close to closing below the 21. Hard sell signal, all red histograms. And there's just, I mean, look, we know if we go below like 110, if we go below 110, there's 3 monthly candles from 76 to 110. And there's way too much money in Apple at way too high a price because people are considering it to be a cash-like position. I would be real careful that your cash doesn't suddenly go down by 50% because that's what it looks like it's about to happen. On a monthly, so about, I mean, over the next couple of months. Googly poogly eyes. So, Google had its meltdown, had its little pushback up. This was our, you know, essentially like bullish momentum move into the split. Essentially just double topped here. Put in a higher low. Still looks decent. Don't want to see it come down here and take out either the horizontal or ascending support. So, when it and if it comes down here, which it looks like it's going to, you know, it better not go below 2142. It sure better not go below 2119, and it better damn not go below 2091. And if it does, all it's going to do is just hit our 382 target, which is $2,000 with the upcoming 20-to-1 stock split. That's $100 Google as predicted, as expected, and it looks like it will very soon be fulfilled as well. So we'll have to wait and see. Don't want to get too excited on this for now, but the fact that it double topped on the 236 and couldn't get there likely sweeps the lows. If it finds support here, is there a scalp? No, because it's going to be like 15% and the stop loss is going to be like 5%, and we're counter trend trading going up to a, you know, fundamental event. No, thank you. I'm good on that. Amazon, again, at a, you know, we hit the 100 target, aka the 2000 target before the split. That played out perfectly. We had the run up as expected leading up to it. and then have done nothing but sell off. So do we expect something like this to happen on Google as well? I fully do. I fully do. Because we top out basically on the event. So do we still have some time where we could run for the split? We certainly could. And that could easily be, let's just say that it picks up right here and just starts moving up. That's 12% back to the upside. But it's really just a reversion of the mean play. And then we fully expect it to dump right afterwards. So the scalp is 12%, not that good. And, the hold is till, what did I say? July 18th. So, it's basically 3 weeks. So, I mean, when you say it like that and you're like, well, 12% for 3 weeks. Damn, how spoiled are you? Well, it's not about that. But, I mean, it also kind of is. But, there's a lot of other really good setups. And the likelihood of this setup playing out in an overall more bearish market is not that great. So, what is Amazon going to end up doing going into the future? I mean, it looks weak and it looks like it's letting go. So I fully expect Amazon at like 97. When we go out to the weekly, this thing looks atrocious. Closing below the 200 exponential is simple. 200 exponential is bearish. 200 simple is flat, about to roll over. We got the reversion to the mean. It got rejected horribly, and then we came back down. We likely are getting ready to roll over and go much lower. And then when we look at this monthly and you say, well, Amazon, how can Amazon look at already confirmed, 821? No denying Amazon is trash right now. It looks absolutely horrendous. We have basically wiped out back to 2018 gains, and we know when the 821 crosses, things tend to get nasty. So, how nasty does it get? Well, it could get 89% down nasty. It could get, 33 more percent down nasty, or it could get 50% down nasty. So 33, 50, or 90. Let's just call it, just whatever. 33, 50, or 90. 33 is basically where we made it to. Does it look done? Not to me. 50 is, basically the previous support from 2018 low, which is like 50%. And that's $73. Seems likely. And then nasty is 59% 200 exponential, or 70% 200 simple without an overshoot. We're talking about like $40 to $60. So another, 40 to 60% down plus from here. It looks nasty. It looks absolutely nasty. And if people don't have money, I mean, what are they going to stop using? You think they stop buying groceries? Or you think they stop buying Amazon? I would say, well, people are pretty stupid, so probably they stop buying groceries and start eating Amazon packaging. So I think that's probably a good idea for Amazon, is to just go ahead, send me a royalty check for like $1 million or whatever. Don't even worry about the fact that I came up with the idea. And then we just start making the cardboard boxes and packing material out of like algae or like moss or mushroom substance, possibly like some other like genetically created, fast producing, consumable organic substance. And then people will still buy from Amazon because they can buy the shit that they don't need, but then they can also eat the packaging. So then they don't have to buy food. So everybody wins. And then also it's good for the environment. So ESG score goes up, profitability goes up. Okay. It costs you $1 million to your boy. Not bad. Okay. Maybe I'll take a percentage though, because this is actually a really good idea. So Amazon, if you're listening, reach out to me. Email in the description. So Microsoft, at key support right now, but now we expect that support to act as resistance. So, how long before this thing lets go? We've talked about this. We had the breakdown, head and shoulders. We had the little bounce back up here, underperforming. Don't want to turn a winner into a loser, obviously, on this one. But, realistically, probably it's going to end up at that 0.5 level, at which point in time, assuming this underperforms, we're going to take the scalp from the 0.5 and look at around 216. And we have that set up. If we get over there, we'll wait and see. But for now, it doesn't look particularly great. Daily does have some bullish divergence. Looks like it's underperforming, though, as to be expected, as it's counter trend. And we don't expect the trend to be bottoming out anytime soon. The weekly, holding at the 382, but we fully expect the 0.5, which is also the 200 exponential, maybe slightly lower, 200 simple. Around 212 we're expecting for Microsoft. And then we go out to the monthly. This is really scary. And I mean, like, disgustingly bad. If we go back down to that 2008 low, I mean, we have not corrected. You know, Microsoft has not corrected this massive parabolic uptrend, you know, that has basically lasted for 14 years. So we didn't correct it. If we do correct it, we're talking about a minimum 236 retrace, about 186. We're talking about 382 reversion to the mean, 200 exponential test, possibly 200 simple test, around 382 at about $106. So, you know, another over 60% to the downside. All red histogram, has not really been outside of, you know, the bullish control zone since basically 2016. So it's been in the bullish control zone for 6 years. And, you know, the equivalence of, you know, 500%. So if we correct, is it that crazy to think that we correct like 23% or 40% after, you know, 600 to 1,000% move to the upside? Doesn't sound too crazy to me. There's no way it would ever go up 1,000% and then it would then go down 23%, man. You're just a bear. You just hate assets and you're just mean because it's up 2,200% and there's no way it goes down 20% after that, because that's just crazy. It'll never go to 163 and especially not to 104. You're just mad because you didn't buy Microsoft and you just hate Microsoft. Or it's just technical analysis, which is probably actually what it really is. So that's what it looks like to me. So, woo, we did it, ladies and gentlemen. We made it to the end. Fuck yes, yeah. 3 hours right on dot. Oh my God, it's almost like it's meant to be. All right, let's see what the chat's got to say, and then I'm getting the hell out of here. Eli says, what's up, Eli? Good to see you. I'm guessing he is referring to tether dominance. Yeah, that's what it sounded like. Arturo, or you wait, tether dominance? No, you mean tether market cap? Damn, now I'm super confused because I didn't even think about tether dominance. Yeah, I never look at tether dominance. I do look at tether market cap. And obviously tether price shouldn't really move. It should stay pretty much pegged to $1. Obviously it doesn't because it's trash, but it should. It's supposed to. Arturo, what's up, man? Am I late? You are late, but you made it. Good to see you, brother. Jay Hoff says, it's only been 3 hours, just getting started. That's not funny, dude. It's not funny. I mean, it is kind of funny, but yeah, also, it's not funny. But yeah, I mean, great stream. Hopefully you guys enjoyed those static videos. I know a lot of people really did. I have already a few more filmed. They're going to be coming out just off days on the streams. So tomorrow, obviously, there's no stream. So you will get another static video in the course, the free lessons, whatever you want to call it. And then Friday, we have our stream from 11 a.m. until, 1 or 2 p.m. on Friday. Saturday, we will have another static video in the series. Sunday, we will have our regular stream, 8 p.m. till, let's be real, 11 p.m. Eastern Standard Time. And then, of course, we'll just keep filling in the gaps. So every day, you guys are going to be getting some kind of content, either a live stream or a static video. Yeah. So look forward to those. I appreciate all the positive feedback. I'm glad you guys are enjoying them. And there are tons and tons more to come because I could literally make 1,000 of those videos without running out of ideas. So that being said, keep your eye out for those. I appreciate all the kind words, not only about the videos, but about the thumbnails as well. Glad you guys are enjoying them. Got to have a sense of humor in these markets. Appreciate everybody that tuned in today. Appreciate all the group members, and also to our newest group member, welcome as of today. Obviously, if you're interested in the group, you can reach out to me. With the group, obviously, any small contribution to support my work, you get access to the TJD Master and the most recent updated awesome copy of the Jewel Thief. And then even if you don't want to support my work, or you're just not in a position to, nothing wrong with that. There's obviously like 10 or 12 free indicators as well that work phenomenally well. Obviously, they're not as good because I say the best for my peeps. But that being said, you can get those from the description down below. If you just want to randomly send a contribution for whatever the hell reason, but you don't want to join the group for some odd reason, you can always send a contribution in Bitcoin or Ethereum. The wallet address is in the description. But I appreciate each and every one of you guys. Glad to have such an awesome community. Get the word out there, share it, and we can grow it together and help people to stop losing their money listening to yes men and start learning how to make money by educating themselves, investing in themselves, and of course their future as well. Because I guarantee you, just from the group members that have been here, with me for a couple years now, are exponentially better traders, investors, and a lot of times are pointing out things that I have not noticed or that I have noticed and not mentioned. I see you guys growing literally every single day. And you know what? That's what it's all about. It's about learning, becoming better, putting in the work, and reaping the rewards for our work literally for the rest of our lives. And eventually, leaving that to our families, our loved ones, whatever. But most importantly, just creating a better life for those that mean the most to us and are around us, whether it's family, whether it's friends, whether it's just yourself and your 80-pound feline, whatever. So that is it. Going to wrap it up there. Appreciate each and every one of you. I will catch you guys on Friday for our 11 a.m. live stream, the weekly market wrap up. But that's it, midweek. Remember, we are days away from the monthly close. We are days away from the quarter close. We are days away from the half close. We are days away from confirming some bearish signals in markets that we have literally not seen since 2000 and 2008, the last time we had complete meltdowns of the system. We have inflation that we have not seen at or around these levels in over 40 years, and we literally have different situation than we have had in most people's investing lifetime. So no matter how educated or successful someone has been in the last 40 years, there's a very, very high likelihood that they have never seen conditions like what we're looking at now, nor has anyone really seen conditions like we're looking at now. So that being said, the absolute most important thing that we can do right now is protect our principal and preserve our capital, because it's very, very easy to make money, but it is very, very hard to make back money that we have lost. And always remember, 50% down takes 100% up just to get back even. And if you go up 100% and double your money, and then you go down 50%, you're right back. Right back. So we just have to be very, very careful that we, and if you go up 50% from $100, you go to 150, and then you go down 50%, your 150 turns to 75. So up 50, down 50, you're still down. Down 50, up 50, you're still down. So we have to protect ourselves from losses far more than we need to worry about gains, because the gains come. All we have to do is not take big losses. Who cares about small wins? Who cares about small losses? And the only thing left is massive gains. Big, thick, juicy gains. The opposite of what Cathie Wood is good for. That being said, going to wrap it up there. Appreciate each and every one of you. Everybody have a wonderful night. Thank you guys all for the support. Thank you all for listening, watching, sharing. And I'm glad you guys are enjoying the static videos. Many more to come as we're only getting started. I mean, been doing this for about 2 years now. Have a phenomenal track record. And I plan on doing it for another probably at least 2 months until I retire. No, I'm just kidding. For a long time, because I really do enjoy this. I enjoy you guys. I enjoy everybody learning and passion for the space. So that's it for today. Everybody have a great night. Crypto trend trader. Remember, none of this financial advice. I'm not your financial advisor. These markets are extremely volatile. Please do your own research and trade responsibly. If you listen to anything I say in these videos, you will undoubtedly, without any doubt in my mind, lose all of your money. You will end up living in a van down by a river, and not the good kind of van. So that's it, crypto trend trader. Peace. I'm out of here.